Your headlines. Earnings optimism, tech shares push US stocks to yet another all-time high, and the positive momentum continues after the bell as social giants Twitter and Snap beat estimates. Not tightening early, that's the message from the ECB. The central bank says it'll maintain support until inflation is more than transitory. Plus, a unique Olympics holds its opening ceremony today. We're live in Tokyo for the first ever games to be held without spectators. Good morning, everybody. Let's have a look at your futures picture then, and this is what European equity market futures look like this Friday morning. They point to the upside after gains yesterday, gains the couple of days before as well. Heavy selling on Monday, of course, but we seem to have turned a corner a little bit from that, so we've continued the recovery. We saw new all-time highs on the Nasdaq yesterday, but it was quite focused on tech stocks, the rally, and we didn't see maybe small caps or all the cyclicals joining in with that rally, so perhaps that gives some reason for caution. But no caution perhaps on European equity markets this morning as we see gains coming through, up by 0.3% on the FTSE 100. The Stoxx 600 up by 0.2% as we see the IBEX opening up by 0.5%. So making moves to the upside as we think about the spread of the Delta variant, of course. That was Monday's dominating theme. We also think about the earnings season that we've seen so far, the inflation pressures, the raw material costs, all of that very much in the narrative, and the pricing power that individual businesses have. We were hearing from our guest in the last hour that maybe some of these style investing themes are going to be put to the sidelines. Maybe you're going to have to pick winners, individual names within sectors, those that do have the pricing power to be able to do well in the second half. So the CAC 40 up by 0.6%. As I say, European equity markets then opening on the front foot. So we opened to the upside. That's after tech earnings optimism pushed Wall Street towards an all-time high. Joining us now is Cole Smead, Smead Capital Management President and Portfolio Manager. Cole, good morning to you. Now, you are value investors. I wonder if you are wholeheartedly excited about what you see in equities at the moment, or are you a bit nervous that maybe some of the value names are struggling sometimes?
Yeah, we're in kind of, I call it the first, maybe second, depending on how you look at last summer, correction in the era of value outperforming growth, which really started with the lockdowns in spring of 2020. And to your point, Anna, if we look back at like a period like 2003 where value beat growth by 86%, there were 4 corrections during that 3-year stretch where in the back of the mind of a value investor, they had to sit there and wonder, is the market telling me something? And really, I think that's the biggest mistake that stock market investors in general are making, is they're looking at short-term price movements and wondering what it is telling them. And the reality is it's the short-term people that are moving these phenomena around versus what's likely to happen over the next 3 to 5 years. And that's kind of the fun part to this is, for example, we're big in energy, and this is just a wonderful time to be loading up the truck again on energy stocks.
And so, Cole, you say that maybe we can take some lessons from the long-term investing, or the latest iteration, I suppose, in the long-term investing trend, which is now called HODL, if that's how you say it out loud, HODL. Of course, the Reddit crowd, Bitcoin crowd, often talking about this as a theme that you buy and you hold it and you don't sell it. But there's a difference between doing that because of some kind of blind faith and doing that because you see long-term value and your fundamental analysis tells you to hold. So how do you square that?
Correct. It's a great point. So to your point, Anna, watching people do that on crypto or options are just very nefarious tools that are likely to damage our net worth. It just looks stupid. Okay, now, but the actual thought behind it is right. The only way to build long-term wealth is to own a concentrated asset for a very long time, whatever that may be, real estate, farmland, a company. And I point that out because you can go look, and we've termed this to be the hodl-volk. In other words, it's the people that hold on for a very long time. Some might call that long-term common stock owners. I just think that sounds terribly boring, and hodl-volk sounds much more in my Germanic Swiss roots. So, who was the hodl-volk in Berkshire Hathaway, for example? It was Charlie Munger. It was Warren Buffett. You had people like Phil Carey, Davis Gottesman, the Sequoia Fund, and then the wealthy people that Buffett knew from Omaha, and they held it for decades. Okay, so I say that because every investor has to make that decision. What do they want to own for a very long time to create wealth? For example, we're in that debate right now in U.S. housing. Look at the move we've had from 1 year ago in U.S. home building. And some people are asking the question, well, is this as good as it gets? And in that subject, we sit in the hodl-volk. We are the people that think the demographics, the lack of supply, just look incredible.
Okay, so yes, you've had inspiration in this this latest iteration of the buy and hold, which you called the hodl-volk. You've had inspiration, as you often do find, at Berkshire Hathaway. Let me ask you then where you go for this hodl-volk now. Is it property? Is it energy stocks? You've mentioned both of those, Cole. And if it is those, are you taking those on as inflation hedges, or is it a much longer term story?
Well, we're buying companies for the economics they get with the criteria we have. But to your point, where we've been going in the last 12 months and where we think is incredibly compelling relative to, say, the S&P 500. Well, Buffett in the 98 meeting said, if you want to beat Bobby Fischer, you play him in any game but chess. So chess for the S&P 500 has been historically tech and blue chip American companies versus that doesn't look very attractive. We can go out and buy energy stocks today. That's 3.5% of the index. It can't change the S&P's return if energy does well. We own mall REITs. Those are 24 basis points of the S&P 500. And then the home building space, it's less than 1%, and we own double digits in that. So we're going to places where we can find great economics, be great long-term owners, and it doesn't help the S&P 500, which was what most people would look and say, if I'm going to own U.S. equities or hire an active manager, what am I going to do?
Thanks very much, Cole. Thanks for joining us. Stay with us, in fact, where we have more of Cole Smead from Smead Capital Management. In just a moment, he's president and portfolio manager at Smead Capital Management. Coming up on this programme, learning from history, Christine Lagarde says the European Central Bank won't repeat the errors of the past crises. We'll discuss the new guidance from the ECB next. This is Bloomberg.
I've always sort of pictured what it was going to be like. I mean, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that two kids for just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Billionaires cars in space?
What defines going to space?
There is a level where you
Is
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around, and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Welcome back to the European Market Open. 8 minutes into our trading session, and European equity markets are moving to the upside. Let's have a look at one stock in particular that moves higher. This is Ultra Electronic. This is a UK-listed company, and it has said today that it is minded to recommend the new Cobham cash offer at £35 a share. You can see it's trading at £33 this morning, so it has jumped by 33.6% on the back of that. Doesn't quite trade at the offer price. A little bit of execution risk perhaps being priced in there by some, but we'll see if we get any political comment on that one. As we were hearing from Joe Easton, it does operate in the defence space. Let's move on to some of the other stocks that are on the move this morning, and we'll start with Signify. This used to be Philips Lighting, and the stock is under pressure this morning, down by 7.5%. Q2 numbers out from this business today, talking about, actually, the CEO talking about structural inflation. I wonder whether that, inflation clearly a theme, raw material prices a theme, how structural this is going to be, how sustained this is going to be will be a focus for many corporates. Vodafone in focus for us today as well. That company moving to the upside today in London, up by 3.4% this hour. Sales beating estimates. That's adding impetus to the network spending drive that we're seeing undertaken by some of these big telecoms providers here in the UK. Berenberg saying that the numbers out of Italy were strong and not as bad as feared. So that whole European play helping there. Let's also look at Valeo. This is a supplier to the auto sector, and that stock doing well this morning as well, up by more than 7%. The most in at least 8 months, in fact. The numbers look solid, according to Morgan Stanley. The stock looks cheap, according to Morgan Stanley, but we had numbers out earlier. Q2 EBIT was a beat. Earnings upgrades were seen as likely. So we'll see what the CEO of Valeo has to say to us a little bit later in this program. We'll be speaking to him later on this hour. The CEO of Valeo, Jacques Aschenbroich, will be with us. Now, Christine Lagarde says the ECB has learned from history and won't derail the recovery by tightening too soon. In the first meeting since the ECB's strategic review, she said the inflation expectations are rising, but there's still some distance from the 2% target.
It is not intended to keep interest rate low for longer. It is intended to deliver on our objective. It is intended to reach the target of 2%. This is what we want to do. And frankly, the quicker we can do that, the quicker we can use those other tools that we have not used a lot in the last few quarters, which is the interest rate. But we are not there.
Cole Smead Capital Management President and Portfolio Manager, is still with us. And Cole, you're a man who focuses on equities, you focus on value investing. Are you concerned that central banks globally, big central banks, the ECB, the Fed and others, are you more concerned that they'll tighten too soon, jump on inflation too quickly, or that they will leave the taps open for too long? What is your concern?
Well, I would follow up on Buffett. He said if you remove gravity, even he would be in the Tokyo Olympics this year. Okay. And what his point was that by not having the price of money anywhere near normality, anyone can win. Any asset at low rates would look attractive at some point. So now to your point, we do not agree with the transitory can, just so you're aware, Anna. And let me explain. We reported 5.4% CPI here in the United States as an example. 1/3 of that was used cars, and your organization and many others reported on that widely. But what they didn't comment on is that 30% of CPI is housing, of which about 1/4 of that 30% is rent, which is reported at 3.4%. It's very hard to find cities in America with rent increases that low in the last year. But then if you go to the other 75% of that housing component, it is what they call OER, owner equivalent rent. The Fed doesn't use market transactions to get their CPI data for that at all. So they're not looking at anything market-based. They send out surveys. And if someone already has their mortgage, all that can really rise is their property taxes in the United States on a fixed mortgage, which means over 20% of a 5.4% CPI print was understated, in our opinion. Okay, so a lot of the big wealth management firms and organizations around the United States are kind of calling for CPI to kind of rear its ugly head in late 22. Our problem with that is that's when it's going to be obvious to everyone. As buyers of assets, you'd want to take advantage of that now, long before everyone's figured that out.
So how high does inflation go then, Cole?
Well, see, that's the worst part about it is you never find out till later how bad it is, Anna. Right? So think about this. So we're probably at a juncture right now where 10 years forward, the S&P 500 will make negative 2% compounded, including its dividends reinvested. So let's just say it's a baseline of 4% inflation that we're going to deal with, using the United States as a picture of that. The problem with that is it's just a terrible setup for the equity owner, and that's not going to help them that much. You know, -6 is no fun, and bonds could do worse. So I say that because, you know, you were talking about the inflation pressures of businesses right now. Unilever came out and reported and said they can't deal with the commodity price increases. That's a staple business saying we can't deal with the commodities in the interim, which means that some of the most staple-oriented businesses aren't going to deal with this inflation. In comparison, U.S. home building, which is a very cyclical industry, it looks obvious to us they're going to pass prices through because all you need is intense demand to deal with inflation. Some products have that, some businesses have that, some don't. And I think people will be kind of shocked at what comes out of this in terms of what has demand to pass on inflation.
Yes, so in terms of pricing power then, are there some stocks that you've looked at once again and sold because you thought, actually, this worked previously, but it doesn't work in a period where pricing power is going to be so important?
Yeah, no, it's a great question. So we've been selling off our position in Disney kind of as a picture of this, not because Disney doesn't have plausible pricing power. The only problem is that they're going into business units like their streaming business where they might not make money for 5 years. And the question is that the kind of economics you want to go out and ascertain as an investor right now when they trade at the highest multiples they roughly ever get, and they might not have success on new business units or the pricing power that they've historically been able to sustain. The odds just don't look very good for success all around, whether you look at pricing power, whether you look at business success, or you look at valuation. Versus, and I mean, people are painting the death of the energy business right now. We get wonderful economics. It is directly tied to economic growth. In other words, if the economic growth of the world picks up, oil is going to be heavily used because it's the lowest cost to grow the world economy. That's completely different than most businesses are going to be dealing with in inflationary pressures.
Is there a transition risk there, though, with those holdings in the more medium term, Cole, or you think about the short term?
I was thinking about this on the way in, actually, and it's funny. Germany got rid of nuclear plants in reaction to Fukushima. We here in the United States had 3 Mile Island. So the developed world's denied nuclear, which is one of the most climate-friendly forms of electricity. We're getting rid of hydroelectric dams in many places in the developed world. Those are the most friendly. Okay, from there, you then go to much more expensive ways to replace those if they're not in oil and natural gas, which means that the market is moving surely higher in energy. I think one big problem for Europe will be trying to allocate capital and not wake up to find out they've been California dreaming on their utilities, and they're dealing with rolling blackouts like the state that I'm sitting to the east of right now.
Okay, Cole, thanks very much for the perspective. Cole Smead, Smead Capital Management President and Portfolio Manager, thanks very much for joining us here on the European Market Open. Let's get to some breaking data across the Bloomberg. French PMI data. We flagged that we had some UK data coming, but of course we have French data and other European data before that. So the July manufacturing PMI, 58.1. That is just a shade below the 58.3 that was forecast, but still in expansion territory. We see the services PMI, perhaps more interesting because of the reopening phase that various economies have been going through. This is for July. Services PMI under where it was estimated at 57, but again, still in expansion because of those reopenings. Now, coming up on this program, Twitter and Snap posted revenue that blew past analyst expectations as users stayed glued to their phones during lockdowns. We'll get the latest next. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We're definitely seeing signs of inflation out there. Commodity prices have moved up, so that's impacting costs. We're seeing it in wages, particularly in areas like hospitality and leisure, where finding workers is difficult. Obviously, compensation's going up. We're also seeing it at the high end in areas like technology. So I think as you look at earnings going forward for companies, you have to take into account input costs going up. It's a clear area where there are some challenges today, and our instinct is this will persist for some time.
So that implies you don't believe that it's transitory. And do you think that the markets are not discounting this risk enough?
Well, it may be the surge itself today may be more transitory because some of this will ease up, I think, as more people go back to work, as markets sort of get back to their natural state. And then longer term, there are some powerful deflationary forces around technology and demographics. Our best instinct is this surge will be bigger than people anticipate, just as we saw the economy coming back was faster and stronger. Markets came back faster and stronger. I think something similar with inflation. At some point, it should ebb and come down, but our best guess is that inflation will be at a higher level than where we were pre-pandemic, and that reflects the fact that we've just put a lot of stimulus into the system.
Well, speaking of strong markets, these rising markets have really helped you. But do you think that we may be at peak growth at all and that valuations might be a little stretched?
So GDP may be peaking just because we're comparing against much lower levels. But the question really is, are company earnings peaking? And we don't think that is the case. We think there's a lot of momentum in the economy. When you look at valuations in the stock market, obviously valuations are full, but if you look at the market, it's probably trading low 20 times earnings or 5% earnings yield. That compares to 1.3% in the 10-year Treasury. So I think the stock market still reflects better value. We're not seeing a lot of the excesses in debt markets that we saw back in 06, 07. And as I said, this economic recovery still feels like it has room to run. So we deployed a lot of capital in the quarter. We did it particularly in sectors where we have a lot of high conviction.
That was the Blackstone president and COO, John Gray, on inflation and equity valuations. Let's turn to technology now. Screen time surge. Snap and Twitter soared post-market after beating expectations on revenue. This as advertisers of all sizes turned to social media platforms to reach people stuck at home during the pandemic. We're joined now on set here by Alex Webb, no longer stuck at home, from Bloomberg Quick Take, here with me in London. Alex, good morning. So big numbers then from these social media companies. Let's start there in terms of the technology sector. What did we learn?
We've got a positive outlook from Twitter and also from Snap, which more than doubled earnings in the most recent quarter in Snap's case. What we're seeing is that a lot of advertisers are expecting that spending is going to recover, consumer spending. There's a lot of pent-up disposable income at the moment, but people are still stuck at home to a relatively large extent. So you combine those two factors, and advertisers are trying to reach those people while also encouraging them to spend, and that's good news for these companies, which in a sense perform much like traditional media companies, where they benefit from surges in advertising spending.
Right, and so this is advertisers preempting a consumer boom to come.
Essentially, yes, it's the expectation. We're starting to see this, with big sort of luxury goods companies, Apple, for instance, as well. They're seeing an uptick in spending on their products because of this disposable income that people have managed to build up over the course of the past year.
Yeah, and obviously at the individual level doesn't apply to everybody, of course, but net, we've seen in the UK and in the US, certainly, and in other economies, these big savings pools built up. Let me ask you about something else in tech, which is also very much a story for the market. A different story then over at Intel. Now, what caught your eye in the Intel numbers?
So Intel numbers, they did grow, but the thing that was interesting was a lot of the growth came from the PC business. And actually the big cash cow for Intel in recent years has been the chips business for servers. Now that, of course, is the cloud. Amazon, Google, Microsoft, all building out their cloud capacity. What they're also now starting to do, though, is develop their own cloud chips. So we're seeing increased competition actually from their own customers, but also from other rivals like AMD. And the cloud business did not do as well for Intel in the most recent quarter. That is a reason for concern because it has been their saving grace in recent years.
So there's a specific around Intel about the part of the chips market that they're exposed to, which is around data centers, but also more broadly around chips. There's a lot of talk about whether rivals are going to bring more capacity to market. I don't know if that touched Intel, but certainly for the sector as a whole, if motivated by supply shortages, a lot of chip companies do bring more capacity to market. People are asking whether they're going to be able to be, whether companies are going to be hit by that further down the road, I suppose.
Something you often see in semiconductors is sort of like a concertina effect, where it kind of swells and ebbs and flows, where you have shortages, so people then build up huge amounts of capacity. That takes 18 months, 2 years to sometimes come online. So 2 years after having huge capacity constraints, you suddenly have overcapacity, and that has a negative effect on pricing. So that's something that maybe is to be expected, probably a little way out from it just yet. But the spending, we saw ASML, a big maker of equipment to produce semiconductors. They had blowout earnings earlier this week. That does herald perhaps some more pricing pressure coming up in the quarters to come.
Okay, we'll certainly watch that with interest. We spoke earlier to the Volvo Cars CEO. I asked him how he would characterize the chip shortage, and he said it was really annoying. So we'll see whether other companies share his view. Thank you so much. Thanks, Alex, for joining us. Alex Webb from Bloomberg Quick Take with us on set here in London. Coming up on this program, the Tokyo Games officially kick off with today's opening ceremony, but the challenges of a COVID-hit Olympics are far from over. We'll be live in Japan next. The excitement would normally really be building around the start of the Games, the opening ceremony, all of the spectacular visuals and theatrics to come. Of course, the mood is very different with Tokyo 2020, 2021, as it has become for well-known reasons. Cases rising amongst the athletes. They are being kept away from the regular population in Tokyo, but to the extent to which they can really lock down that Olympic village, very much part of the conversation. We'll get an update from Tokyo next. This is Bloomberg.
Is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into the European trading session for this Friday morning, and we have European equity markets opening to the upside. You can see we're up by 0.5% on the Stocks Europe 600. Let's get to some breaking news. We've had the French PMI, we've got the German PMI coming through right now. German July manufacturing PMI, 65.6. That is ahead of forecast. The July services PMI number rising to 62.2, also ahead of forecast. A little bit stronger versus forecasts for Germany than we saw with France. And these numbers themselves in the 60s are higher than we saw with France, possibly reflecting different stages of the pandemic reopening story. But they're all above 50, well above 50, suggesting, of course, that we are in expansion territory. So that's where we are on the overall markets, moving to the upside this Friday, continuing that rebound from the losses of Monday. Then we add in the macro story, and you can see it's not having much impact on the euro right now. Let's think about where we are on stock markets then from a sector perspective, and we have every sector in Europe trading to the upside. So it is broad, it has some breadth today. Media stocks are the worst performing, if you like, but still to the upside. Consumer products also, we saw Unilever disappointing in that sector earlier on this week. Healthcare and utilities also there as underperformers, but auto and parts moving to the upside. Basic resources is higher, and autos and parts, we are going to be talking to the Valeo management shortly, and that company we certainly saw has been moving to the upside, up by 7.7% in this morning's session. We'll be back to the auto sector shortly, but let's think about something else that is happening in just a few hours' time. The Summer Olympics kicks off later today in Tokyo. After being plagued by delays and uncertainty, thousands of athletes who have been itching to compete can breathe a sigh of relief. But even as the cauldron is lit, the challenges for organisers and officials will only intensify. Bloomberg's Juliet Sali has a recap of what it took to get this Olympics to the starting line.
A global sporting spectacle in the middle of the worst public health crisis in a century. The Games are going ahead, but they've already been described as the weirdest Olympics ever. Given fears a global gathering of about 90,000 athletes, officials and volunteers could become a cauldron of COVID variants, strict measures are in place aimed at stopping a potential super spreader event. Most of the athletes are vaccinated, but they'll still have to test daily and stay in a bubble within the Olympic Village. Socializing and group meals are banned. Win or lose, athletes must leave Japan within 48 hours after their last event. Japan wanted this Olympics to mark a turning point for humanity, a light at the end of the tunnel for a world stumbling through a second year of the pandemic. But those ambitions have crumbled. Tokyo is under a state of emergency through the entire Games. Thousands of athletes are set to compete in empty stadiums with no chance, no fans, no families to offer support. Prime Minister Yoshihide Suga's political fortunes are closely tied to a successful Games, which were supposed to symbolise Japan's recovery from the 2011 earthquake, tsunami and nuclear disaster. But athletes and officials have had to brave a cascade of calamities just to get to the opening ceremony, and an uncertain legacy awaits the entire Olympic movement at the finish line of Tokyo 2020 and could mean a very different looking Games in Paris in 2024.
Now, with the opening ceremony only a few hours away, let's get to Bloomberg Quick Takes Kurumi Mori, who is outside the Olympic Stadium in Tokyo. Kurumi, very good to speak to you today then. So how are things on the ground? It's a very strange Olympics, not like any Olympics we've seen before.
It sure is strange. Tokyo is under a state of virus emergency here. That means no spectators in venues in Tokyo. No bars and restaurants can serve alcohol. And that means everybody's asked to stay home. You'll see behind me, the stadium is right there. This is the entrance where about 950 people will be entering the opening ceremony. That's down from 60,000 plus spectators expected to fill up the whole stadium and really root for the opening ceremony before the state of emergency was imposed and before COVID. So a very different Olympics, strange for sure, as you say. But, you know, there are definitely some muted excitement we feel on the ground. We see people come out here taking pictures. And so we do see a little bit of that.
You do. That's interesting, because I was going to ask you, what is the mood like in Tokyo? You didn't get the sense building up to this that residents of Tokyo were all that keen. At least we saw some protesting.
Yeah, I went to actually a couple of soccer games in the past 2 days. Although the opening ceremony marks the beginning of the Olympics officially, it starts 2 days ahead of time. And so I got to visit some of the soccer games and go in and experience it myself. Before the game started, I saw a bunch of Japanese locals go outside the stadium, and they told me that they're going to live stream the game on their phones and watch from outside. They just wanted to get a little bit closer to the actual stadium. Then inside, it was very quiet. It was almost like a practice match or a test event that the Olympics had held prior. So definitely different. As for the athletes, we spoke to Megan Rapinoe, the captain of the U.S. women's soccer team, at a post-game presser, and she told me that, yes, this is very different, unlike any other Olympics before, and she feels that there is no fanfare, and, you know, that's very unfortunate also for the athletes. So locals, athletes alike, similar sentiment.
Yeah, and what do we know about the opening sentiment then, Karimi? Because, I mean, for those who are really, really serious about the sport, sometimes they comment that the opening ceremony can just be a bit of a distraction ahead of the sport, but others see it as a time where you're really interested to see what kind of cultural statement is going to be made. So what do we know about what's happening around that ceremony?
Yeah, there has been some controversy. We had the organizers firing the creative director of the opening ceremony just yesterday, just 1 day before the opening ceremony. So again, some controversy here in Tokyo. But besides that, we are expected to welcome about 950 people in the stands today. I'm about to go in shortly myself. It's of officials and journalists. So we get to go in, but there will be no spectators of regular spectators, ticketed spectators. We do have some VIPs coming. That number has dwindled, though. U.S. President Joe Biden, we know, is not attending. Instead, First Lady Jill Biden is representing the United States. Shinzo Abe also has said, the former Japanese prime minister has said that he's also skipping the event. And you might remember him from the Rio 2016 games when he came out as Mario to really support these Tokyo games.
Thank you very much, Karimi. Really good to speak to you. Karimi Mori on the ground for us in Tokyo from Bloomberg Quick Take. Thanks very much for bringing us the setup to the Olympics. Now let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. London's job market has sprung back to life. 2 separate surveys show it's become a hotspot for the first time since the pandemic closed vast sections of the economy. The Recruitment and Employment Confederation says London had 6 of the top 10 areas in the UK for new job postings last week. And job search website Indeed says consulting and financial firms were among the top companies seeking staff in the city. Italy is to restrict many leisure activities for those not vaccinated or without a recent negative test for the virus. Amid a surge of the Delta variant, the country's cabinet says so-called green passes will be required to dine indoors or to enter crowded venues such as theatres, cinemas or gyms. Bloomberg's learned that the Carlyle Group is seeking to raise as much as $27 billion for its latest flagship fund in what would be the industry's largest ever private equity pool. If successful, Carlyle's fund would break the $26 billion record held by Blackstone. Carlyle co-founder David Rubenstein is the host of The David Rubenstein Show, which airs on Bloomberg Television. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura Wright here in London. Coming up on this programme, we speak to the Valeo CEO. He'll be with us shortly after the company reported earnings and beat estimates and said that the company is seeing an easing of the global chip shortage. The stock certainly trading higher today. We'll talk about that. This is Bloomberg.
This week on Bloomberg Green, moving on from oil.
They stand to lose somewhere, my guess would be on the order of $4 billion. All of that is kind of like the sunk cost of just trying to do the project.
Adapt or die. After the cancellation of the Keystone XL pipeline is a multi-billion-dollar industry facing extinction.
I think more needs to be done to move the planet on to cleaner forms of energy. And we certainly in Equinor believe we're taking the lead on that.
Big oil becomes big energy. We speak to one of the first companies to publicly start the transition to renewables. But is it moving fast enough?
Thousands of wells in the Permian, tens of thousands. How many of those are going to collapse? Even if it's only 1%, that's 100 wells that are going to pollute aquifers and destroy huge swaths of land.
And millions of oil wells lie abandoned across the American South. Whose responsibility is it to clean up the mess? I'm Kaylee Lyons in New York, and don't miss this edition of Bloomberg Green, airing this weekend on TV and Quick Take. Week on Bloomberg Green, moving on from oil.
They stand to lose somewhere, my guess would be on the order of $4 billion. All of that is kind of like the sunk cost of just trying to do the project.
Adapt or die. After the cancellation of the Keystone XL pipeline is a multi-billion-dollar industry facing extinction.
I think more needs to be done to move the planet on to cleaner forms of energy. And we certainly in Equinor believe we're taking the lead on that.
Big oil becomes big energy. We speak to one of the first companies to publicly start the transition to renewables.
Thousands of wells in the Permian, tens of thousands. How many of those are going to collapse? Even if it's only 1%, that's 100 wells that are going to pollute aquifers and destroy huge swaths of land.
And millions of oil wells lie abandoned across the American South. Whose responsibility is it to clean up the mess? I'm Kaylee Lyons in New York, and don't miss this edition of Bloomberg Green, airing this weekend on TV and Quick Take.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we have liftoff. Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Welcome back to the European Market Open. 42 minutes into Friday's trading session, up by 0.5% on the Stock 600 here in Europe. Broad gains, all sectors in positive territory today. Now, the French car parts maker Valeo is the top performer on the Stock 600 so far today. That's after the company reported first half results last night. The company says that semiconductor supply constraints have peaked and will gradually ease by the end of the year. They also reported EBITDA that came in ahead of estimates. Let's get into this conversation now. Then I'm pleased to say that Jacques Aschenbroich joins us, the CEO of Valeo. Jacques, very nice to speak to you on the program today. So the market seems very pleased with what you've said. Your stock is up very strongly, up by more than 7% today. How much visibility do you have about the future performance of Valeo?
There's two dimensions. The first one is a very short term, where we're impacted by the semiconductor shortage, and you know it. We probably the market lost 10% production in the first half of the year because of the semiconductor shortage. That should ease step by step until the end of the year. That's what we see. On the longer term, We have positioned Valeo very well on two market segments that are growing very fast: the electrification of the powertrain, low and high voltage, and the ADAS. And on those two topics, Valeo is clearly the worldwide leader.
Okay, on the first of those, you talk about your expectation that the chip shortage will ease by the end of 2021. Why do you think that, Jacques? What gives you the level of assurance to make that statement? Have you had conversations with suppliers who have indicated this?
We have a daily conversation with our suppliers, of course. You know, there were three events in a market that was very tight, three events. What happened in Texas, the fact that a semiconductor factory from Renesas burnt in Japan, and the lockdown in Malaysia in the last few weeks. Before the lockdown in Malaysia, we were really seeing an improvement of the availability of semiconductor very clearly. But because the market is very tight, any kind of problem that the lockdown in Malaysia puts a stress again on the market. But clearly, when we look at the forecast we are having seen from Valeo, we have the impression that things is going to improve and the availability from our suppliers is improving. That's the reason why
that's some of the drivers.
Confident things should ease until the end of the year.
So that's some of the drivers behind that forecast. In terms of the broader picture on the raw materials that go into the parts you make, Jacques, what kind of inflation are you seeing in those raw materials? What worries you there?
Yeah, it's clearly a topic that is concerning. The aluminium, the copper, the steel, the resins are increasing sharply, but there's no choice. There'll be compensation asked to our customers. We have some pass-through for all those raw material, for the copper, aluminium, and a part of the steel, where it's contractually based with our customers, and that is automatically passed through the customers. Some others we have negotiation. But the industry is back to inflation mode, and all our competitors are exactly in the same situation, and we'll have to pass it through our customers, and we need to have compensation for our customers. We had forecasted 80 million net of compensation impact for Valeo, and what we see today is very much in line with the 80 million we had forecasted for the full year.
Okay, so you say that sometimes you can get this back from customers because of contracts. Are those contracts long dated, Jacques? If we saw high commodity prices over an elevated period, would this then catch up with Valeo? Would you have reduced ability to pass those costs on?
Oh yeah, the contracts are very precise. It's sometimes after 1 quarter, sometimes half a year, but that is very, very precisely indicated in the contract, and that is automatic. For the other part, then we have to negotiate with our customers, but we have lots of way of compensation. Therefore, I feel extremely confident that the focus on our product, the fact that we have very good innovation for our customers, and the fact that the whole industry is impacted by the inflation, will be able to have the level of compensation we need to overcome that situation.
We've seen headlines, Jacques, suggesting that France, the French government, is resisting the EU pressure to agree to phase out combustion engine car sales by 2035. So maybe some pushback from the French government about the timescale for electrification. How do you view that?
No, the direction is clear. The world of automotive is becoming electric, either with battery or with hydrogen, which will be mainly with battery. The only question is not the date of 2035, but in 2035, can we allow plug-in hybrid or not? That is the whole question of the French government. But when you look at our customers, most of them are really preparing themselves for a full electric world. That is clear. Then there is only the debate in 2035 for Europe, will it be pure BEV, battery electric vehicles, or will it be allowed a part of plug-in hybrid, but the world will be electric, whatever happens.
And which would be better for Valeo?
We are very well positioned for both. As a matter of fact, I should have said three, the low voltage and the high voltage. For the high voltage, both on hybrid and on purely electric cars. For us, it's relatively equal whether it is with or without the plug-in hybrid. But we see and we prepare ourselves, and we have invested a lot in a common joint venture with our partner Siemens into the high voltage for motor, for inverter, for onboard charger. And we are investing a lot, and we are positioning ourselves for the full electric world in Europe, in China, in North America. And therefore, the market will grow tremendously in the years to come.
How able are you, Jacques, to do all of the capital expenditure, all the investment that you want to do at this point? We sit here at a real pivot point for the auto industry. Big investment, big change is coming, big investment is needed. Are you able to do everything you want to do on that front?
Yes, we have the balance sheet that allows us to really finance all the capex we need, both in electrification and in data. So it's not a problem of balance sheet. In our business, we need to standardize what we would call the technological platform. We have standardized most of our products already. We need to do the same, and we do it step by step for the new technology of electrification. And with the standardization, we're able now to reduce our R&D expenses and to reduce our capex for the traditional business of Valeo, including low voltage, including ADAS. And we have exactly to do the same for Valeo Siemens in the years to come. So that is absolutely key: standardization of R&D, standardization of our capex, and then we'll be able to finance our growth potential.
Jacques, thank you very much. Thanks for speaking to us. We appreciate it. Jacques Aschenbroich, who is the CEO of Valeo. Coming up on this program, the aftermath of the ECB, as well as European earnings reports. We'll get into the factors driving the European session so far this morning, 50 minutes into it. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. We are 53 minutes into our European trading session and making decent gains across European markets this Friday, up by 0.6% on the Stoxx 600. Laura Cooper joins us from the Bloomberg Markets Live team, macro strategist there. Laura, good to speak to you. So we continue with this sort of Friday feeling, making moves to the upside. I'm not sure what our excuse was earlier in the week, but it is Friday, so we're going higher. Really sort of turning a page from Monday's obsession with the spread of the Delta variant. That is still happening. But markets just not really focused on that right now.
Yeah, it certainly has been a wild week for risk assets, and notably the fact that Europe is extending those gains today after that substantial drawdown that we saw on Monday does suggest that those peak growth fears, those inflation fears, are now proving to be a head fake because we are seeing gains extend. That's being supported by upbeat earnings. We did have quite a dovish ECB yesterday helping at the margin, and then we have those very strong PMI prints today that do show that this European recovery continues to really run on all cylinders.
Yeah, where are we post-ECB? I'm just looking at the euro. And if you remove yesterday from the equation, we haven't really moved very far, Laura. We're still at 117. There was a lot of movement, a lot of volatility, and I'm sure many people enjoyed that in yesterday's session during the ECB press conference. But we still have levels on the euro that are pretty similar to Wednesday. What did you take away from the ECB?
I think what I took away from the ECB was really they're changing the language, but the structural issue still remains. Yes, they want to keep rates low until they see signs of sustained inflation. So essentially, it's a case of perma easing because they don't expect those price pressures will actually head above target anytime soon. So I think they're unsurprisingly dovish. And I think the fact that we are seeing bond yields back at that below that negative 40 basis points, the fact that we did see Italian debt bid, really this is a case of a central bank that is not thinking about tapering or tightening policy anytime soon.
And what was your take on the PMI data then out this morning? Some of it from France a little lower than estimates, the German number a little higher, but all of it well above 50. What was your sense?
I think the key takeaway for me this morning was really from the German print. So the fact that we saw services come in at a record high does suggest that this economic recovery continues to accelerate. The fact that we are seeing the manufacturing remain elevated, and that's despite these supply bottlenecks that are potentially curbing output. Yes, we did see some hints that businesses are more cautious about the medium-term outlook, but new orders remain strong. Price pressures are starting to ease at the margin. So I think really the key takeaway is that, the European growth story remains intact.
Laura, thank you very much. Have a good weekend when we get there. Laura Cooper, Bloomberg Markets Live, macro strategist. Thank you for joining us this Friday on the European Market Open. 56 minutes into our trading session then, and European equity markets are moving to the upside. All sectors have spent much of the past hour in positive territory, even if some of the laggards didn't make the gains of the winners. But things like the auto sector, autos and parts, as we heard from the Valeo CEO a little bit earlier on, it's that parts sector driving things today. So that's moving the DAX higher, the DAX up by 0.6%, but broad gains across these markets as we wait. Just 3 hours to go until the Olympic opening ceremony in Tokyo. This is Bloomberg.
To the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example. Are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where digital disruption can really help with some of those groups. That's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. There's always more progress we can make. And sure, you're right. In places like private investing. And there are still sort of pockets of the market where you have to be in the know.
Went up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
It is not intended to keep interest rate low for longer. It is intended to reach the target of 2%.
Infections have been rising for a couple of days with a distinct and I think worrying momentum.
The Green Pass is not an arbitrary matter. It is a condition to keep economic activity open.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what's coming up on today's program. Not tightening early, that's the message from the ECB, saying it'll maintain support until inflation is more than transitory. Italy is the latest European country to introduce vaccine passports for indoor activities as the infection rate rises. In the U.S., the CDC says America is at another pivotal moment in the pandemic as cases climb again. Plus, a unique Olympics holds its opening ceremony. We're live in Tokyo for the first ever games to be held without spectators. Well, good morning, everyone. A lot of the focus, of course, is on earnings, and that's giving a nice lift to the markets, although there are some questionable economic data, a little bit mixed is how I would say. The latest one, though, coming out from the euro area, it's for the July services PMI, and it's actually better than expected, rising to 60.4 instead of the expected 59.3, so a touch better. Now, let's now get straight to our top market story with our Danny Berger. Good morning, Danny. So overall, it seems that we're reaching record highs in the markets despite this pretty mixed picture for data.
Exactly. And it's a mixed picture for data. It's a mixed picture when it comes to monetary policy and the impact that has on these markets as well. And because of that, Francine, with these near all-time highs, there are some worrying signs underneath the surface. So you have European stocks moving higher today. NASDAQ closed at an all-time record yesterday. But part of it is the fact that a lot of these gains are being led by big tech. That usually occurs when we're concerned about the growth trajectory. Since these are growth stocks, we know will deliver us that reliable growth. Now, the yield picture, another one that's potentially worrying as we hit all-time highs, if they are underpinned by lower yields. Yields lower in the 10-year again this morning, and bond yields yesterday just absolutely plummeting with a more dovish ECB that's going to be more accommodative, that's going to be patient and allow inflation to overshoot. And what's really starting to be important here are the inflation expectations in Europe. They are still so far from 2%, Francine. I think we have this on a chart. There's that, and that really shows that the market is betting that we're not going to hike rates for years to come.
Yeah, and Danny, that's really a divergence with maybe what we're seeing with the Bank of England and the Fed. Now, the other big story is, of course, Carlyle pushing to be the largest buyout fund and raising about $27 billion. I mean, this is a nice Bloomberg scoop. Danny, how symptomatic is this of the search for yields, that actually investors want to put their money in, these alternative assets where they're either buying back companies or actually looking at selective non-market things?
It's absolutely symptomatic of that search for yield, that search for return in an equity market that is very richly valued. The question is where do you get that return? And private equity is certainly a place, and it's more popular among different types of investors. So this is a monster fund, 46% larger than their prior record in terms of a flagship fund from Carlyle. It would beat out Blackstone's current record fund as well. And private equity, they just are raking in the money. Part of the interesting thing, though, is when these giants are bringing in so much money, they have to put it to work. So that means in the private sector, Francine, valuations are going to continue to get more and more expensive. They're going to continue to chase deals. Part of this, Bloomberg reporting that they're going to do a growth equity fund, which is smaller deals, which usually isn't typical of the big private equity giants, but is becoming more typical. They're moving down the food chain. So this is just going to continue to push valuations higher, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the markets. And Carlyle, also, a disclaimer, Carlyle co-founder David Rubenstein is a host of the David Rubenstein Show, which airs also on Bloomberg TV. Now, for markets to the Olympics, well, today's opening ceremony is only a few hours away, a formal start to a unique games that will take place without any spectators. Let's get more now from our Bloomberg Quick Take, Kurumi Mori, who's outside the Olympic Stadium in Tokyo. Kurumi, I imagine the excitement on the ground is really palpable. I mean, what these games, will they really only be remembered for COVID? How different will they be?
Hi, Francine. Yeah, we're now about 3 hours out from the start of the opening ceremony. You can see behind me, though, there's not much going on, although this is the main entrance to get into the stadium, and that's because this opening ceremony will only have about 950 people attending. That includes journalists and officials, as well as some VIPs. The number of VIPs, even though, has been scaled back. U.S. President Biden is not attending. The First Lady is attending to represent the U.S. in his place. So it definitely is a scaled-down version of the opening ceremony. But earlier in the day, we saw a huge crowd here, and it was for the 6 jets flying over the opening ceremony to mark the beginning of the games. We had a big crowd here, everyone trying to take photos. There was a lot of excitement then, but now it's more of a muted excitement. There are some people walking around taking pictures, but it looks like people are going home because we're in a state of emergency.
Kurumi, so what do we actually know about the opening ceremony? I know it's been mired in scandal as people that were in charge of it had to leave.
Yeah, that's right. The creative director of the opening ceremony was actually fired yesterday over a video that was controversial. He did a skit making fun of the Holocaust, and that obviously, surfaced on the internet. And so he got fired yesterday, and he was actually the second director to be fired. So again, more controversy for these opening ceremonies here. But we do know that there will be about 200 plus groups walking, athletes walking in this opening ceremony, not full delegations like usual, but there still will be the performers, hopefully some fireworks. I'll see you soon. I'm about to go in, and I'll tell you more later.
Yeah, I can't wait. Kurumi, I mean, a lot of, well, maybe not a lot, but, more than maybe expected athletes have tested positive and won't be able to compete. How much of a problem will it be in the next couple of weeks?
Yeah, Francine, actually, I went to a soccer game, a men's soccer game, Japan versus South Africa. South Africa had 3 members of the team test positive on Saturday, and so we didn't even know if the games would go on until several hours before the start of the match. When I went there, we went to the post-game press conference. The coach said, every time we go somewhere and people see us, they run away because they know that we tested positive. So he feels a lot of unease. The cases, again, are just going up here in Tokyo. We reached a near 6-month record yesterday. Similar again today, and 110 cases related to the Olympic Games as of today. So the cases aren't going anywhere. We need to keep an eye on them, and the athletes clearly very affected.
Kurumi, thank you so much. Kurumi Mori there of Bloomberg Quick Take, frankly, with the best job in the business in the next couple of days and weeks. Now, smart conversations continue on Bloomberg Surveillance Early Edition. Coming up, we speak to the chief executive of Europe's largest utility about their plans to decarbonize the second largest island in the Mediterranean. Francesco Starace joins us after 9:30 a.m. London time. But up next, we also speak to Berenberg's chief economist, Holger Schmieding, about this week's ECB meeting. Now, if you have any questions for either of those guests, just IB plus TV Go. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. London's job market has sprung back into life. Two separate surveys showed it's become a hotspot for the first time since the pandemic closed vast sections of the economy. The Recruitment and Employment Confederation says London had 6 of the top 10 areas in the UK for new job postings last week. And job search website Indeed says consulting and financial firms were among the top companies seeking staff right here in the city. Now, Italy is to restrict many leisure activities for those who are not vaccinated or without a recent negative test for the virus. Amid a surge of the Delta variant, the country's cabinet says a so-called green pass will be required to dine indoors or enter crowded venues such as theaters and cinemas or gyms. Now, the White House has accused China of being irresponsible and stonewalling a Phase 2 World Health Organization investigation into the origins of COVID-19, including the possibility it came from a Wuhan lab. Beijing says it will not participate in any inquest, insisting there is zero evidence to support the lab hypothesis. Global leaders want to examine that theory even further. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Christine Lagarde says the ECB has learned from history and won't derail the recovery by tightening too soon. In the first meeting since the ECB's strategic review, she said the inflation expectations are rising, but there's still some distance from the 2% target.
It is not intended to keep interest rate low for longer. It is intended to deliver on our objective. It is intended to reach the target of 2%. This is what we want to do. And frankly, the quicker we can do that, the quicker we can use those other tools that we have not used a lot in the last few quarters, which is the interest rate. But we are not there.
Well, we're joined now by Holger Schmieding, Chief Economist at Berenberg. Holger, thank you so much for joining us. So there was a definitely tweak to the guidance. It was a press conference that Christine Lagarde did since that strategic review. And I thought what was most interesting is that basically she said, well, you know, they won't repeat the mistakes of the past. Does it mean that it puts the ECB on a completely diverging path from what the Fed and the Bank of England will do?
Yes and no. The yes is, of course, in the sense that the inflation outlook in the Eurozone is significantly more subdued than it is for the US and the UK. And hence the ECB is on a divergent path. No, in the sense that, of course, if and when inflation finally rises to an extent that the ECB wants, the ECB will then react. Judging by what the ECB itself said yesterday, they do not expect to raise interest rates before, say, 2025. I think inflation may actually be a bit higher than the ECB projects, so an ECB hike may still come earlier than that, possibly even by the end of 2023. But the European Central Bank for now is firmly on hold with rate policy.
Holger, are you expecting more consensus and actually on what to do going forward? And is that what the president needs right now?
Well, we're expecting the ECB to move with their asset purchase programs later this year to say that the pandemic emergency is abating and that hence the emergency asset purchase program can be scaled down from April next year onwards. That is one thing. But the interest rate question is a question that will be there for quite some time. If our above consensus forecasts for growth and especially for inflation play out, then the ECB may still already move with rates at the end of 2023, whereas the US Fed is likely to hike rates already in the second half of next year.
Holger, what does the ECB actually need from the Fed and Jay Powell right now?
I don't think they need very much from the Fed. The best thing for Europe that could happen is that the US Fed gets it roughly right. That is that the US economy continues to expand nicely, but does not get to the threshold of overheating. So as seen from over here, the US has a bit more of an inflation problem than the Eurozone has, and hence a tapering in the US starting at the latest early next year would probably be appropriate.
Holger, what's the one thing that actually makes you nervous about the European economy right now? I know there's a number of divergent things. We're expecting a lot of recovery plans. I mean, just yesterday, Italy was going to introduce a passport, a vaccine passport, much like France is doing. I mean, what does, where are we in terms of vaccinations in Europe? Can we actually withstand this third or fourth wave?
The data suggests that we can withstand the Delta wave of infections. We are seeing that, of course, hospitalization rates in the countries that have already been affected heavily by the Delta wave are creeping up, but they are doing so even a bit more slowly for what we can say than what we have seen in the UK. The vaccination process in the Eurozone is about 5 weeks behind that of the UK, but it has picked up pace. And as in terms of infections, the Eurozone is also roughly 4 weeks behind the UK development. Probably the UK scenario will play out, namely that the rise in infections is not causing such strains for medical systems that the reopening of the economy would have to be reversed. So we are watching this very closely every day, but so far this Delta wave of infections does not seem to be a major risk to the economic performance of the Eurozone. We have another risk, which for the near term is a bit annoying, and that is supply shortages in industry.
Yeah, and Holger, actually to that, and I know we're seeing like inflation rise because of supply shortages or because of trade concerns. I joke that the newsroom uses, drinks probably too much espressos and too much coffee, but Arabica coffee is now trading at £2 or $2 per pound for the first time since 2014, and that could also filter through inflation pressures. Holger, thank you. Holger Schmieding, their chief economist at Berenberg. Now, coming up, we speak to the chief executive of one of Europe's largest utilities, Francesco Starace of Enel joins us shortly as the Italian company sets out a roadmap to decarbonize the island of Sardinia. If you have any questions for him, just IB plus TV Go. This is Bloomberg.
Here on Earth who are wondering, why are we investing all this money in space, this time in space? Talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now, the Italian Prime Minister Mario Draghi, as the country moves to restrict leisure activities for those who haven't been vaccinated or have not recently tested negative. Now, the so-called Green Pass will be required to dine indoors or to enter crowded venues. I think we were just hearing from Mario Draghi a little bit earlier on, who basically said that this will now be required. And let's get straight to our Director of Research at Bloomberg Intelligence. He's Sam Fazeli with the very latest. Sam, thank you so much for joining us. Now, I'm trying to understand whether, the fact that people in France and now in Italy have to show vaccine passports to go indoors for dining and other leisurely activities, does it act as a circuit breaker, or is it actually a motivator for people to get the vaccine?
Good morning, Francine. I think it does both, actually, if you think about it. If we assume, even with the Delta variant, that people who are vaccinated, even though they're at risk, perhaps at slightly higher risk of catching an infection, that they're going to have lower amounts of virus in their body when everybody is vaccinated in the same space, then the risk of passing it on becomes a lot less, and the risk to the health system for those people catching it and then becoming severe disease people is much lower. So on the one hand, it does that, and on the other hand, it gives you a motivation to go and get your vaccine if that's what you want to do.
Sam, Matt Miller was making fun of me today because I always ask, like, you know, can you still pass on the virus when you're vaccinated? But we actually have new data studies. I mean, so let's say that, you know, you take the Pfizer shot. It's my understanding, but I know these are preliminary trials, that you can have an 86% efficacy, meaning that you won't get severely ill, but actually it's only a 36% chance that you don't get the virus at all. Am I right?
Yeah, so I think you're referring to some news that's coming out of Israel there, because the UK data was better than that. And I need to see, because all I've seen are slide shots of the Ministry of Health from Israel data. We need to see this in print, because we need to understand what it is that they've done. Why is it 30-odd% is really low, and I doubt that is actually the end of the story there. So I need to look at that. I would say double vaccinated, we're closer to 80% with the Pfizer-BioNTech vaccine, even against the Delta variant, based on the UK data.
Sam, what we find confusing is actually the Delta variant is also a lot more spreadable. I'm reading that, you know, you can have a lot more of a virus load when you pass someone with the virus. So what's the right way? If you're double vaccinated, do you wear a mask or not?
Yeah, I mean, Francine, you're preempting a Bloomberg Opinions piece that I've got going out today as well. And the way I answered that question was, what do? I wear a double mask when I go into a space where I don't know what the status of the people are. Are they vaccinated or they're not? Are they infected or they're not? If I know that I'm going into a restaurant and everybody's vaccinated, then obviously I don't worry as much about it. Of course, there's always a risk that you can catch it, but I would not worry as much about it. Otherwise, 2 masks for Sam Fazeli.
Yeah, Sam, I mean, double mask is something that we haven't really heard much about in the UK, right?
No, we haven't. But then if you think about that one mask was good against alpha, then you don't really need a lot of mathematics or scientific reasoning to think, well, perhaps for something that has higher viral load, or what we call inoculum, maybe I'm better off wearing 2 masks or a really good mask and a surgical over it. Frankly, I've been doing that for the past 3 or 4 months.
Sam, thank you so much. Our Bloomberg Intelligence, Sam Fazeli there. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Coming up, we speak to the chief executive of Enel. He's Francesco Starace. This is Bloomberg.
the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Not tightening early, that's the message from the ECB, saying it'll maintain support until inflation is more than transitory. Italy is the latest European country to introduce vaccine passports for indoor activities as the infection rate rises. In the US, the CDC says America is at another pivotal moment in the pandemic as cases climb again. Plus, a unique Olympics holds its opening ceremony. The first ever games to be held without spectators kicks off in Tokyo shortly. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I am Francine Lacqua here in London. Now, we're just getting some data. Again, markets are actually at a record high. This is really supported by some pretty encouraging earnings news. The data a little bit mixed. We did have some good data out of Europe earlier on, and then the very latest on the UK, a composite. I think it's coming in pretty much as expected, and you can see pound there, 137.35. Now let's get a readout on the wider markets with our Danny Berger. Danny, what are you seeing?
Well, look, it was a roller coaster ride of a week, and it is ending higher with some support behind risk assets. It's twofold. One, it's the earnings season, which you talked about. Of course, there are signs of concern in there with virtually every single company mentioning concerns around inflation, but it's also just the potential of perma easing coming from the ECB, that supportive monetary policy, certainly giving investors an impetus to go in, to buy bonds, to buy equities if they're going to have the central bank backing them. Now, one of the things this has driven is the German 10-year bond yield below negative 40 basis points again. And that differential between the German bond and the U.S. 10-year continues to drive further apart. So that means there are some worrying signs underneath the surface. You have gains that are continually led by more growthy stocks like the NASDAQ, but nonetheless, they are gains as we continue to trade near all-time highs, Francine.
Danny, thank you so much. Our Danny Berger there with the latest look at the markets. Now, Norsk Hydro's aluminium metal division brought in record earnings in the second quarter as a global economic recovery turbocharged demand. Aluminium prices up around 25% this year. Well, for more on all of this, we're joined by Norsk Hydro's Chief Financial Officer, Paul Kildemo. Mr. Kildemo, thank you so much for joining us on Bloomberg this morning. So first of all, there's been a lot of analysts and economists talking about aluminium and where that price will go. What kind of pre-orders do you see? What are you seeing in terms of demand?
We're seeing a very strong demand currently. What we have the fortunate situation to be is integrated along the value chain and downstream in our extrusion operations. We see that the demand for parts into automotive, demand into residential building and construction, both across Europe and across North America, is developing strong. You have a premium on top of aluminium called the extrusion ingot premium, which has moved up nearly 3 times since the start of the year, signaling how tight the markets are.
So how long are you expecting this strength in aluminium to actually last?
Well, the further we move into this year, the more of the bottleneck effects are coming out and the more sustainable demand takes over. And we are seeing signs of this. And, you know, aluminium is not purely a demand game. There is a supply situation also. And I guess capacity coming on stream has been lower than many people expected towards the start of the year, especially related to environmental restrictions in China and the similar. So the net effect of these bodes for quite a balanced market for aluminium through 2021. And then we will have to see as we approach the end of the year if demand is as robust as it looks now.
So there's this big inflation debate, which really underpins everything that central banks are trying to look at and underpins the markets. Where do you see the prices of aluminium going? Is this a good indication? Are you seeing basically inflation pressures that are here to stay, or do you think the current strength in prices is something that will be short-lived?
Well, currently, the aluminium price is trading well below the cost curve. Typically, the aluminium price trades at the 90th% of the cost curve, and inflation in cost elements would then push up the prices. We are seeing inflationary effects on the cost side. Fuel oil, caustic soda, alumina, and the similar. They are pushing in that direction, but it's still a huge gap between cost fundamentals to where the aluminium price is trading. So aluminium pricing is much more related to demand supply than the inflationary pressures we're seeing now.
How much of a headache is a chip shortage for your auto consumers, clients?
For our clients, I believe it's a headache. For us, it's less than you might expect. We are exposed to automotive producers, both through selling aluminium metal, but also through selling aluminium extrusions. And even though we do see that there are some negative effects, the compensating effect of more electrical vehicles being sold and prioritized by the auto producers is impacting a company like us positive. Where it's also tight in some parts of our aluminium value chain, we are able to redirect some of the shortfalls into other stronger margin segments. So for industry in general, probably a bit of a headache. They expect it to loosen a bit during third quarter is what we're hearing from the customer side. For our side, we mitigated quite well.
You mentioned there some of the electric vehicles. How much green aluminium is there? So again, how much of a concern when we have these carbon border adjustment tax? What kind of impact does it have on your industry? Is there enough green aluminium around?
Well, currently, there's enough green aluminium around to meet the demand on the primary aluminium level. But the more this increases, the tighter it becomes. We produce Hydro CIRCAL, which is recycled aluminium based on 75% post-consumer scrap. Those markets have been very tight, and we've constantly been sold out. Whereas for the primary aluminium side, we're building a market position. In both these markets, we are seeing customers paying a premium for the greener products, and the further tightening through Fit for 55, CBAM, etc., bodes positively towards having a global focus on greener materials.
Mr. Kildemo, how much equity are you raising to actually power your hydrogen business?
Hydro as a company is not raising any equity. What we're looking into is for two operations that we have created, Hydro Rein and a hydrogen company, to be established as a standalone companies and raise equity in order to finance their growth. We haven't communicated the amounts yet, and we will get back to the market on that during the year.
All right, I look forward to another interview when you're ready to announce that. Pål Kildemo, thank you so much for joining us, the Chief Financial Officer there of Norsk Hydro. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak to the Chief Executive of Europe's largest utility. He's Francesco Staracci of Enel. He joins us just as the Italian company is setting out a roadmap to decarbonize the island of Sardinia. If you have any questions for him, IB plus TV Go. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio. The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here. If you want.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Twitter has boosted its sales forecast for the current period after second quarter numbers went beyond estimates. It's now expecting revenue to be up $1.3 billion as global events like the Olympics drive up advertising. Meanwhile, social media rival Snap saw sales more than double in the second quarter, coming in way ahead of estimates. Daily active Snapchat users also exceeded expectations at 293 million. Now, London's job market has sprung back to life. Two separate surveys show it has become a hotspot for the first time since the pandemic closed vast sections of the economy. The Recruitment and Employment Confederation says London had 6 of the top 10 areas in the UK for new job postings. Now, that was last week. And job search website Indeed says consulting and financial firms were among the top companies seeking staff right here in the city. Intel gave a lackluster sales forecast for the third quarter, indicating its data center chip business is continuing to lose market share in the face of stiffer competition. Sales in the current period will be about $18 billion. Now, that's slightly below analyst projections. However, new CEO Pat Gensler says growth will resume in the second half when he expects the global chip shortage to bottom out. JP Morgan is planning to more than double the advisors in its traditional broker business as it plots an expansion in wealth management. Amid intensifying competition for rich clients, the US bank is aiming to hire more than 500 advisors in the coming years, bringing its total in the unit to 1,000. Citigroup and Deutsche Bank are among rivals growing their wealth management offerings. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, known for its Costa Smeralda and the crystal clear waters that surround it, Sardinia is the second biggest island in the Mediterranean. On top of its outstanding natural beauty, the Italian island has natural resources in abundance. More specifically, sun, wind, and water. Our next guest has an ambitious plan to decarbonize Sardinia. We're joined now by Enel's Chief Executive, Francesco Starace. Francesco, thank you so much, as always, for giving us a little bit of your time to try and understand exactly your thinking when it comes to renewables. Good morning. When you look at Sardinia, so your plan is basically to make it the most green island ever and bypass basically the use of gas. First of all, how difficult is this? How much does it entail in terms of investments?
Let's put it this way. Sardinia is, like you said, the largest island, and it has been connected to mainland with interconnection cables that today total 1,300 megawatts. So it's pretty connected already to mainland, but the transmission system operator in Italy is planning to almost double that connection, so adding another 1,000 megawatts link and increasing the existing link of additional capacity. So that brings Sardinia to about 2,400 megawatt interconnectivity. In Sardinia today, we have two large coal plants. One is our plant, and then there is another operator with this plant. We think they can be shut down safely once this interconnection is up and running. And in the meantime, we can plan to build additional capacity in renewables in order to cope with the demand of Sardinia and the further electrification of its consumption and green the island. So have the island fully depending on electricity, decarbonized electricity, which means that this island will probably be ahead of Italy, of the rest of Italy, in terms of its trajectory to a neutral energy system.
But Francesco, what is this for?
So
I mean,
it seems possible.
So this is good. I mean, is it actually, are you doing this so that you show it's possible, or is it something that could be used elsewhere? How scalable is this?
There are other islands that have similar ambitions. For example, the Hawaii have decided they want to be by 2040, I guess, 45, and neutral. Tasmania, another island that has this ambition. The Balearic Islands in the Mediterranean by 2040. So it is possible in several large islands. We're not talking small islands that are pretty easy to decarbonize, you know. But this is a large piece of Italy. The population is huge. So it's now technologically possible. And I would add this, you know, that in the last decades, Sardinia has not been reached by methane gas, natural gas. So today, what fossil fuel is being consumed in Sardinia is either coal or oil for heating into homes. So it's pretty polluting the use of fossil fuels in the island. So we think we should skip the natural gas intermediary phase altogether and just go ahead of the rest of the country. That can be then replicated in other parts of Italy and other parts of the world. I mean, every island possibly could go into this trajectory, looking at it from a totally renewable standpoint.
Francesco, we were also looking at some of your market cap. I mean, it's actually amazing that when you talk about the big energy giants, it's actually now Enel that's coming up trumps. So it's really the renewables that are taking on this, you know, old role of big energy companies. There is, though, a concern that you have diminishing returns with renewables. How much of a worry is that, as you know, whilst the whole world is trying to become greener?
I think that renewables, as a pure play, have reached a little bit an asymptotical position. So if you look at renewables, just renewables, nothing else attached to it, you reach a stage where the returns are going to plateau and probably go down a little bit in the next years because of increased competition, but also because of maturity of the industry. You know, typical industry reach a mature state and they kind of level off in terms of returns. Our view is that the strategy of an integrated utility is a much safer position. So you have generation, which is now only renewable, basically, and then you have distribution networks and customer base. You have to look at the whole value chain in order to really have a safe strategy and one that captures the evolution of where margins goes across the value chain. That's the secret of our stable returns and hence of the market cap. You know, just renewables is a bit risky right now because it is a little bit a mature market, increasingly competitive, rightly so. So you should expect margins to stabilize and slightly decrease over time.
But do diminishing returns in general, not for Enel because of your diversification, but does that actually diminishing returns in renewables slow the transition?
No, I think they actually will accelerate the transition from the customer standpoint, because when you have diminishing costs and therefore diminishing returns, you end up having diminishing prices, which stimulate electricity demand. I mean, the secret of electricity is that it becomes cheaper. And because it's cheaper, it gets into the market and therefore displaces fossil fuels. Hence, the volume of the business increases. So we're sitting in a business that basically will treble its size in the next 10 years. Why that? Because it's becoming more abundant, cheaper, and therefore more convenient for people to use.
What does rising raw material prices like steel and copper actually mean for renewables?
I think it means what it means for many industries. So a tension between supply and demand, and for prices spikes that will reflect into costs of components like wind turbines or solar panels. This is not new to the industry because this is a growing business. It has already experienced cycles of shortage of this, shortage of that, and spikes of prices. But the fact that the dimension of the business is so global nowadays implies that the supply chain will adjust. We've seen that in the past, and we're going to see it again. And so this is just a blip. You can say a blip is not long, 12 months, but in the history of this sector, 12 months are a blip. So it will take probably 6 to 12 months to stabilize again, and capacity is going to improve, is going to be put on the market in a large way. There are already integrated plants in silicon and wafer production and panel production being planned and built. We are planning to do a 3,000 megawatt production facility in Italy just for that. So there is the market will respond, and it's already responding. For the time being, if you have to buy for deliveries in 22 or 23, you are facing steeper prices. That's for sure.
Francesco, thank you so much for joining us today. Francesco Starace there, the Chief Executive of Enel, joining us this morning. Now, coming up, Twitter and Snap posted revenue that blew past analyst expectations as users stayed glued to their phones during lockdowns. We'll get the latest next. This is Bloomberg.
Happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, screen time surged. Snap and Twitter soared post-market after beating expectations on revenue. This as advertisers of all sizes turned to social media platforms to reach people stuck at home during the pandemic. Well, joining us now for more is Alex Webb from Bloomberg Quick Take. Alex, great to speak to you. So big numbers for these social media companies. Does it wane when we go back to work?
Not necessarily. I guess the thing is that, you know, in last year we had just a huge drop-off in consumer spending, full stop, and that also then carried over into the amount that people were willing to spend on advertising. What we're now seeing is that certainly among some strata of society, there's a lot of pent-up disposable income, but people are still, to a greater or lesser extent, stuck at home. So they've got money to spend, and how are they consuming the ads to decide what they're going to spend it on? A lot of it is coming on social media. So we've seen big boosts at both Snap and Twitter. Twitter also saying that it's benefited to an extent from the sporting events of the quarter, the Olympics coming up, and of course the European Championships, which are always a bit of a bonanza for advertising.
How do you think Twitter will change in the next 5 to 10 years, Alex?
I mean, I think it really does have to change. If you look at it at the moment, it basically performs much like a classic media company. If you look at the trend of their earnings, it's much like ITV, which experienced a huge drop-off last year as a TV station in advertising spending, and is enjoying a boost with the Olympics. Now, Twitter is trying to diversify into more kinds of media, so it's adding newsletters, adding new ways of subscription so that content creators, whether that be media professionals or otherwise, can forge direct relationships with their competitors. I think that is actually potentially quite a compelling offering. If we look at the success of things like Clubhouse and other subscription newsletters, Twitter has the ability to do all of that.
A different story for Intel.
Yes, Intel's it still grew in the most recent quarter, but the huge benefit of recent quarters or years has actually been its chips for servers, for data centers. And actually, in the most recent quarter, we saw the gains coming from the PC business. It's not quite as profitable a business. Those chips for servers can cost $50,000. The problem is a lot of its customers, that's the big cloud computing companies, Amazon, Google, Microsoft, Alibaba, they are starting to develop their own chips in-house. That's a threat to Intel, which is already seeing increased competition from not least AMD and other chip makers. So the outlook for Intel, not quite as rosy. They do have a new CEO in there trying to, you know, kick things up and change it.
Alex, thanks so much. Alex Webb there from Bloomberg Quick Take. Now, we're just a couple of hours away from the opening ceremony of the Tokyo Olympic Games, so we'll have live reporting throughout the day. We also heard that hours before the opening ceremony is due to start, to remember, it's a near-empty stadium. There were quite a lot of protesters calling for the Olympics to be scrapped. This is because of virus surging cases. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we have liftoff.
Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Inflation has picked up, although this increase is expected to be mostly temporary.
You have to take into account input costs going up. It's a clear area where there are some challenges today, and our instinct is this will persist for some time.
More or less all costs have gone up, and yes, we're transferring some of that to our customer, but also trying to become more efficient in our operations.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, July 23rd. Our top stories today. Back in record territory, the S&P 500 is again approaching a new high. Economic data is mixed, but second quarter earnings give investors something to cheer about. Carlyle's blockbuster buyout fund, the firm's trying to raise as much as $27 billion for the largest ever private equity pool. And is Olympic gold tarnished this time? Will the Tokyo Games formally get underway? COVID and a decade of drama have some wondering whether the event should just have been canceled. So good morning, everyone. I'm Francine Lacqua here in London. Matt Miller and Taylor Riggs in New York. Kaylee Lines is off today. Now, a lot of the focus will, of course, be on the new guidance that we had from Christine Lagarde at the ECB yesterday. A lot of the guidance also filtering through some pretty spectacular earnings report. Taylor, what are you seeing on the markets? And good morning.
Yeah, good morning, Francine. We're really starting to see it. Remember yesterday, we're coming off of a 3-day gain, at least for the MSCI All World Index. So you had a lot of green on the screen yesterday. You're getting a little bit of a pullback, at least today, within some of the Asia markets, off now, at least within China, off about 1.2%. I want to change the board and dive into that a little bit because China tech, not only some big regulatory crackdowns, but also some of those headlines about Didi and then, of course, turning tutoring firms into nonprofits. That's really weighing on China as we see this morning. You're coming off of a big, strong day yesterday, a pullback today. You are getting some dollar strength relative to yen weakness as that classic sort of risk-off haven that is coming back into play today. Finally, let's bring it all back here in the U.S. As you can see within futures, you had a decent rally yesterday, Francine, the little breadth. So you're trying to see some of that follow through within the morning. You did see a big rally in yields as well. Yields were down a few basis points. So you're trying to hold on to some steadiness within the yield curve market. Bitcoin, I had to do it because it's 5 a.m. So let's just do Bitcoin. You're up 0.3%, really holding on to those $32,000 levels, Matt.
Yeah, I appreciate that. Looking at Bitcoin over 32,000, and everyone was worried we're going to crash down to 20. It could still happen, obviously, with the volatility of crypto. But we're in a really risk-on mood today here in Europe as well. Actually, I'm here in New York, but I'm so used to being in Berlin, obviously. You can see the IBEX up 0.6%, the CAC up 0.75%, the DAX up 0.6%. So gains across the board. And if you look at the broader Stock 600 benchmark, we'll see gains 4 out of 5 days this week. So Monday was tough, and then we recovered every single day and are now back where we started. Stocks Europe 600 at 460, 459. The euro gaining ground. I thought it's interesting the euro gaining a little ground as the dollar falls short. We got a lot out from the ECB again this morning. We got a lot from the ECB's forecaster publishing. And then you can see the 10-year bond yield right now still at negative 41 basis points, even though it's coming up a little bit. So, Fran, the ECB put out the forecasts today, and it showed that forecasters, the survey of professional forecasters, is what they call it, only expect inflation at 1.9% this year, and I think as low as 1.5% in 22 and 23. So still far under the level that they want to overshoot.
Yeah, and it was quite significant, Matt, of course, that yesterday Christine Lagarde said, look, if you look at history, what the ECB doesn't want to do is tighten too early and repeat the mistake of the last decade. One thing I would point to, Matt, is a little bit of divergence in economic news. I think there was some, the supply chains in the UK were hit because of COVID, and so we had some disappointing PMIs.
Yeah, well, I mean, there's going to be a divergence there post-Brexit, and especially considering the fact that the COVID situation, although it looked like Britain handled it well from the get-go in terms of vaccinations, is pretty out of control there. Look, I think it's interesting that you've got 50,000 infections a day there, and yet people are going clubbing. They're back at China White or in bougies or wherever the kids go these days. Meanwhile, Tokyo, Japanese want to have canceled the Olympics. They've only got 1,900 infections a day. So there's a real divergence.
Matt, I need to bring you up to speed with some of the coolest clubs in London, but we also have 600,000 people in isolation because they've been pinged. So a weird dynamic here in the UK. Now, this is what is also coming up ahead today. ECB meeting to decide on whether and how to lift the bank dividend cap. So watch out for banks. We'll also get a rate decision from the Bank of Russia. That's at 6:30 a.m. New York time. The Olympics, of course, we all know it. It kicks off in Tokyo with the opening ceremony at 7 a.m. And then Honeywell, American Express, and Schlumberger release earnings. Schlumberger. I know, I want to say the French way. Schlumberger. This is the way I learned it. It's going to be difficult to get that out of my head. Onto banks, and JP Morgan planning to more than double the advisors in its traditional broker business as a Wall Street giant plots an expansion in wealth management. Let's get more from our Bloomberg, Danny Berger. So, Danny, what exactly are you seeing?
Well, look, this is a push that a lot of banks are doing right now to put more money and more resources and build up that wealth management division like JP Morgan is doing, because really it has been a stalwart. For example, even though there's been really anemic loan growth, the wealthy are still taking out loans. So JP Morgan specifically, they're doubling their advisors in their JP Morgan advisory firm. It's a boutique wealth management firm to about 1,000 advisors now. Still relatively small. For example, Morgan Stanley has about 15,000 advisors in their wealth management unit. But this has been a clear directive from Jamie Dimon, who wants to see this part of the business grow. Just last month in a conference, he said that it is imperative that they diversify revenue streams away from traditional banking. So this is just part of that aim.
It's really, there's a lot of industry news out today, Danny, and I think the Carlyle story is one of the most fascinating, not just because of Carlyle, but because of the, I don't know, a polite way to put it, there's like a size match in terms of how much these private equity firms can raise, and there's so much money just flooding into the asset class.
Yes, there's so much money, Matt. And look, even before this fundraise, there were records amount of dry powder. Look, the trends that are driving people into private equity, it didn't happen because of COVID. You already had a lot of negative yielding debt. People wanted yields. Public markets looked really frothy, but the pandemic just fueled that. So now that's why you're getting these record funds. This, of course, one-ups Blackstone's record fund by just $1 billion, but still would be greater. So the question is, now armed with more money, what happens to this deal boom that we've been witnessing? Because if you're an investor and you've given Carlyle some of your money to contribute to this target that they've set at $27 billion, you're going to want them to spend it and go after deals. And so if you're going to put $27 billion to work, you'd have to imagine that the competitiveness of the market right now means that you're going to have to swallow some pretty high multiples. So I think it's a fascinating and very competitive time for private equity right now.
Absolutely. Danny, thanks so much for joining us. Danny Berger there. We should note, by the way, that Carlyle co-founder and co-chairman David Rubenstein is the host of the David Rubenstein Show peer-to-peer conversations and Bloomberg Wealth, which both air on Bloomberg Television. So now we are going to let the games begin. The Olympics opening ceremony just a few hours away, a formal start to a very unique, you could say unprecedented games that will take place without any spectators. Sophie Jackman joins us out of Tokyo, where she is our deputy bureau chief. So, Sophie, we all know there's been a lot of controversy because of COVID around these games. What's the mood like in around the games in Tokyo?
It's a bit of a surreal mood here in Tokyo. We have now made it to the start line with that opening ceremony just hours away. And when these games were postponed last year, it certainly was everybody's hope that by this time the pandemic would have subsided, we'd have a big party again. And as the weeks turned into months, organizers whittled away at their plans for that. Now with no spectators, very few people coming into the country who are not directly associated with the games. So that windfall for hospitality and hotels is all dried up and gone. And here in Tokyo, we are still under a state of emergency to combat rising virus cases, and so we'll be at home under the aircon watching it on TV like everybody else. The most kind of worrying headlines that we've seen in recent days have been about cases in the Olympic Village, but that is just a handful.
I was going to ask you about that, Sophie.
Absolutely.
How many people are actually now in isolation and won't be able to compete? And what are some of the measures put in place to make sure that actually an athlete that's positive doesn't infect others?
Absolutely. So the athletes were not coming to a COVID-0 country to begin with. Cases have definitely been here on the rise, even independently of the Olympics. But the idea was to make sure every athlete who wants to be is vaccinated and then keep them as separate from everyone else as they can. We just have a handful of athletes who have tested positive in that testing regime, which is tests every day, and just a couple of those are in the Olympic Village, and so will be kept under isolation. And anyone who is coming into the country will have to take a PCR test at the airport as well. There's still a chance that some of our favorites athletes, the ones to watch, could be pulled up by this testing regime, and then they will have to be isolated from their peers. What we're going to watch from now is any sign of a spread within the Olympic Village or other venues that would suggest that that bubble maybe isn't so secure.
Thank you, as always. Bloomberg's Sophie Jackman, of course, joining us from Tokyo. Francine, in the meantime, I want to take a look at what has been moving yesterday after the close. Pretty incredible when it comes to some of the earnings that we saw. You're continuing to see massive follow through for Snap. I went home yesterday at 5 p.m. We were only up 10%. You're now up 16%. This company's just crushed it, both when it comes to revenue and earnings, sort of the forward guidance that Barclays is already saying well ahead of expectations. Jefferies is also calling it sort of the best in class when it comes between Snap and Twitter. So let's go to Twitter, because that's actually also another big mover here. Not as good as Snap, but you're still up about 5%. Daily active users, Francine, you're up 11% year over year. Now about 206 million daily active users. Though when there is good, there is also some bad. I also wanted to take a look at Intel, also again getting earnings after the bell yesterday. Take a look at this. You're off about 2%. Remember, this is a big turnaround story. The CEO, Pat Gelsinger, saying they're still trying to turn it around, but there are still some big concerns about the data center, which, as we know, is such a bellwether for how this company is doing. Analysts and investors are still saying, you know what, we still need to see this turnaround story, Francine.
Yeah, it's really interesting, Taylor. I mean, I was reading that actually they got a big boost by people watching news conferences, ECB, or even the Olympic Games on Twitter. And I thought, oh, that's interesting. And then realized I was doing the same.
Yes, it's all about live events for Twitter. You're totally right.
Coming up, but we talk about inflation with Nicola Mai, PIMCO portfolio manager, and then a little bit later on, Joyce Chang, JP Morgan chair of global research. This is Bloomberg.
I've always sort of pictured what it was going to be like. I mean, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Taylor Riggs here in New York and Francine Lacroix in London. Kaylee Lyons is off today. Now, we've been hearing a lot about the ECB and inflation, how dovish they're going to be, especially in relation to the Fed. Well, they don't really have any reason to get hawkish, right? If they want to overshoot 2%, they released a survey of professional forecasters today that showed they only expect inflation to get to 1.9% this year and then back down to 1.5% in the next couple of years. Here you can see the five-year forwards, and I should welcome our listeners on London DAB digital radio and just tell you that this chart shows expectations for inflation dropping, and only picking up a little bit post-COVID to just over 1.5%. If they want to overshoot 2%, it's going to take some real change. Joining us now is Nicola Mai, sovereign credit analyst and portfolio manager at PIMCO. Nicola, I guess we can see this, you know, in negative 41 basis points on bonds, but what's the likelihood that the ECB ever has a reason to turn hawkish?
Well, I think that's going to take a very long time, as you said. I think compared to the Fed, which is in the business in part of managing upside inflation risks, given the high inflation prints, I think the ECB's main task remains to raise inflation from current levels. So we're going to have a bit of a head fake in Europe, but it's mostly in headline inflation driven by energy and food. If you look at core inflation, it remains stuck at around 1%. So I think, you know, the ECB will hike rates maybe a couple of years behind the Fed. I think the forward guidance this week kind of confirms that the ECB is going to be patient. It's not going to engage in hawkish type mistake of the one that they made a decade ago. So if you think about the Fed hiking maybe in the second half of 23, maybe the ECB is a couple of years behind that. And of course, we'll see if the cycle is still going by then. So it's not inconceivable to think that they will actually never engage in a hiking cycle.
I mean, let's hope that sometimes, Nicola, I guess they'll have to normalize at some point. Nicola, we were talking, you know, you talked about the difference there between the ECB and the Fed normalizing. If you also put the Bank of England, it could come sooner, like more aligned to what the Fed is doing. But then today we had that UK PMI signaling that the economy is slowing because of supply chain issues. Is this going to be a short-term problem?
I think, well, the fact that the UK is peaking, the UK economy is peaking is clear. I think the UK is a bit ahead of in the cycle compared to Europe. They vaccinated earlier, they reopened earlier, so I think they're slightly ahead. I mean, I think we have to also keep in mind that the PMI, yes, did fall 4.5 points, but it's still, you know, around 58, so it's still very strong. I think on the whole, the Bank of England has a more hawkish reaction function compared to the Fed, for example, in that, you know, they're further behind in the cycle, but they have been talking in a more hawkish manner, arguably. And that's partly because they don't have the average inflation targeting that the Fed has. And also they don't have the same degree of global responsibility in terms of like managing global markets. You know, a rate hike by the Bank of England doesn't have the same impact as a hike by the Fed. So from our perspective, the Bank of England will probably hike close to the time when the Fed hikes, which is in the second half of 2023, despite a less advanced cycle, so to speak.
Nicola, it's amazing. We're pretty shocked here in the U.S. that a 125 on the 10-year, which fundamentally doesn't make sense to a lot of analysts, until you look at the negative 40 basis points on a German 10-year, a Swissy 10-year. Is that the demand that's driving a 10-year yield in the U.S. down to a 125?
I think there are several factors that are pushing rates down. I mean, one of them is positioning. A lot of people in the market were short, so it was kind of easy to snap back to lower rate levels. It's partly Delta variant concerns, the idea of peak growth. It's partly also the hawkish turn maybe by the Fed that became somewhat less tolerant of higher inflation over the medium term. And what you say is low rates globally are also a bit of a depressing factor for US rates. So I think it's a combination of factors. We've been expecting treasury yields to range in the 1 to 2%, to be in the 1 to 2% range. Because we think equilibrium rates are low. At the moment, you're in the lower part of that range, so I think it's possible that we're going to have a bit of a correction higher as the global economy continues to recover.
Nicola, thank you so much. Nicola Maider, sovereign credit analyst and portfolio manager at PIMCO. Now, coming up a little bit later today, we'll also speak with Spain's Prime Minister Pedro Sanchez during his visit to the U.S. That interview, 5:30 p.m. in New York, 10:30 p.m. in London, and this is Bloomberg.
Week on Bloomberg Green, moving on from oil.
They stand to lose somewhere, my guess would be on the order of $4 billion. All of that is kind of like the sunk cost of just trying to do the project.
Adapt or die. After the cancellation of the Keystone XL pipeline is a multi-billion-dollar industry facing extinction.
I think more needs to be done to move the planet on to cleaner forms of energy, and we certainly in Equinor believe we're taking the lead on that.
Big oil becomes big energy. We speak to one of the first companies to publicly start the transition to renewables.
Thousands of wells in the Permian, tens of thousands. How many of those are going to collapse? Even if it's only 1%, that's 100 wells that are going to pollute aquifers and destroy huge swaths of land.
And millions of oil wells lie abandoned across the American South. Whose responsibility is it to clean up the mess? I'm Kaylee Lyons in New York, and don't miss this edition of Bloomberg Green, airing this weekend on TV and Quick Take.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London. Matt Miller in New York with Taylor Riggs. Kelly Lyons is off today. Now let's get straight to the Bloomberg. First Word News, and a bipartisan group of U.S. senators is closing in on a $579 billion infrastructure deal. Now, they agreed to pay for it in part by delaying costly Trump-era Medicare regulation. Details won't be announced until at least Monday. Any deal could face opposition from Democrats in both houses of Congress. And the head of the CDC says the U.S. is at another pivotal moment in the pandemic. Rochelle Walensky says COVID cases are once again climbing. Beds at some hospitals are filling up. Now, the government says that by the second week of August, the number of new cases may be up 39% from last week. Talks between the European Union and the U.S. on vaccine passports are making little progress. Well, Bloomberg's learned that because there's no federal certification program in America, that could be a concern. The EU launched its COVID pass at the beginning of the month. The bloc is in advanced stage of talks on the vaccine passport with the UK. And the job market has sprung back to life in London. Well, two separate surveys show it's become a hotspot for the first time since the pandemic closed vast sections of the economy. The Recruitment and Employment Confederation said London had 6 of the top 10 areas in the UK for new job postings last week. Now, the job search website, Indeed, says consulting and financial firms were among the top companies seeking staff in the city. It's just nice to see, I guess, some of these industries, Matt, bounce back and look for workers. The other story, and I'm bracing for a higher price of a cappuccino or an espresso in London, is because coffee has topped $2 a pound for the first time since 2004, and that will translate probably into the consumer.
I saw that. So Arabica is more expensive than it's been in 7 years. And, you know, this time of the morning, it's important. So I know, Francine, you live on coffee. I'm not. I'm a tea drinker. Yeah. Taylor, and you're so British. Normally in the afternoon. Are you a coffee?
I'm a tea drinker now. Coffee at 5 a.m. is rough. Yeah. Got to start in easy, like Francine's cup of tea.
Yeah. I'm outflanked. I mean, I only have espressos. I feel like that's the only, thing that really wakes you up in the morning. Maybe if there are less coffee drinkers and the price doesn't go up by as much, Matt? Maybe supply demand?
I mean, I think that there could be more as people return to office. You know, maybe during the pandemic, people decided to chill out a little bit, working from home, having a nice Earl Grey or even like some kind of green chamomile tea. But now that they're going back to the office, maybe they're hitting those espresso machines.
All guns blazing with the espresso. Coming up next, Joyce Chang, JP Morgan Chair of Global Research. We'll talk about the global economy. We'll talk about supply chains, inflation, and maybe, just maybe, we'll also talk about the cost of a cup of coffee. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，
沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station.
出发，是，敬礼。
China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Our Francine Lackman, London. Matt Miller and Taylor Ridge in New York. Haley Lyons is off today. Matt, we could chat about a number of things. We could chat about the ECB and the new guidance, some pretty strong earnings actually filtering through markets, and then actually this vaccine passports, right? Between the US and Europe, they can't quite get together, and it's unclear if you can use your, for example, UK vaccine passport to travel to Europe.
What about the Olympics? I'm fully vaccinated.
Let's also talk about
I test negative. I'm not really worried about the virus. I'm psyched about the Olympics, man. I mean, these kids have been training forever for one shot, and I know there will be no spectators live, but I'm going to be glued to my television screen for the next couple of weeks just watching to see who gets the gold. You know, at the end of the day, when you look back in the history books, no one's going to care that there were protests about whether or not they should have done it. If you got the gold, you got the gold.
If you got the gold, you got the gold. I have to say, my heart really goes out to the athletes that cannot actually perform, that showed up in Tokyo and that can't perform because they tested positive. So it's something that will probably plague the games in the next couple of weeks. Taylor, this is probably not playing out in the markets, but certainly the Delta variant is.
Yeah, that's an interesting point, Francine. We've really seen perhaps some of the markets shrug off some of these concerns when it comes to the variant. You've seen continued record highs on the NASDAQ 100. Now, namely, of course, as we know, that's been a big defensive sector and a big defensive move. And so you have seen some of that reflationary trade within the Russell 2000, for example, yesterday really pull back. You're seeing, though, further gains, at least within Europe, and then again back into the reflationary sort of domestically focused stocks here within the Russell 2000. You're up 0.7% within the futures, and bonds are mostly steady, though. We just heard it from Nikolai Mai, of course, that it's a 1 to 2% range is really where he's looking. I've heard even more calls from BMO Capital Markets. It's like 1.25% to 1.3%. Really tight trading range as we all sort of push forward to the Fed next Wednesday. Finally, you're seeing a little bit of some dollar strength here, but nothing really to write home about. Let's flip up the board, if we will, and just take a look again. Francine, I hit this at the top of the last 30 minutes, but just pretty incredible when you're taking a look at what the analysts are saying about revenue, earnings per share, sort of the engagement that you're seeing within Snap. They are crushing it relative to Twitter, which is really had some pretty low expectations. And speaking of low expectations, unfortunately, it's Intel. It is just that turnaround story that the investors and analysts cannot just quite wrap their head around yet.
I think that's one of the most interesting stories playing out in stocks today, Taylor, because we had Texas Instruments yesterday, and of course the demand for chips is so huge, everybody's boosting supply. We could end up in a situation in a few quarters where there's just way too many chips being made for the demand after everybody pulled their orders up. I'm looking also at the S&P right now, and what I think is interesting and what this chart illustrates, with that I'll welcome our listeners on London DAB and I'll walk you through it, is that we're already at a level on the benchmark index that's above the average analyst forecast. The average strategist forecast, this is the mean, is 42.42, but we're already at 43.67, and we've talked to a lot of people who are way more bullish. I mean, Byron Wien is at 4,500, and he has a pretty good track record of forecasting. Plus, Francine, I believe our next guest may be even more bullish than that.
Oh, yes. JP Morgan, very bullish on the S&P 500 target, actually raising it to 4,600. So joining us now to talk about all of this, Joyce Chang, Chair of Global Research at JP Morgan. Joyce, as always, thank you so much for joining us. So what are you looking at to actually support that more bullish call on S&P?
Well, great to be with you, Francine. Well, first of all, we don't think that U.S. growth has peaked yet. We think the third quarter is the peak. We think it's over 8% growth after 8% growth in the second quarter of the year. But we've also just seen such a pullback on some of these recovery plays. We've seen a 30 to 50% pullback, but we see very strong earnings growth here supporting the S&P 500. We also think that you're going to see more capital return that will take us through 2023. So for our estimate, when we take a look at share buybacks, we now see that that's running at an annualized rate that's about 775 billion year to date. So your previous record was $850 billion. So we think you have capital return, some of the buyback numbers that are going up, very strong earnings growth, and that there are some very attractive entry points here, and we haven't seen U.S. growth peak yet. But I think the problem is...
I think in terms of the industry groups that you like, I mean, you want to be constructive on semiconductors, I believe energy, and also banks. How much are you expecting, or how long are you expecting the chip shortfall to last?
Well, I do think that the problem is that we see three different cycles that are going on right now, which are linked, but they're not necessarily synchronized. So you've got the COVID cycle, where I still would characterize it for a lot of the drivers of growth as being more late cycle. You have the economic cycle itself that's early to mid cycle, and then you have the global inventory cycle, which is in its infancy with the supply side constraints. And that's why we continue to think that you're going to continue to see this, the demand story, the supply side constraints that will still lead to stronger growth numbers that are going forward. So I think this is going to persist for a while. This is sort of more of a structural issue when you look at how the U.S. is trying to address this with the CHIPS Act and other things. So we're not going to be behind this. These are not synchronized cycles. And this is why I still think that you're going to see more momentum going forward.
Why do we have yields at 128, 129 on the 10-year? Real yields are still negative 1%. I get that you get far less in Germany and Switzerland, as Taylor was showing us earlier, but it seems like the bond market is telling us something about growth expectations that's just a lot more bearish.
Well, if you look at what the bond market is telling us, I mean, we think that you're at least 35 basis points below fair value. It's implying that you'd have to see real growth drop by 3 percentage points, like to 0.5% for real GDP growth. So I think it's overdone. Look, we had a very front-loaded move in the first quarter of the year with a lot of positive surprises. You had bigger than expected on the fiscal package. You had sort of an outside treasury move. In the last 4.5 months, we haven't seen a catalyst. So it's the positioning, but the market is really waiting for a catalyst here. And what are those catalysts? It's going to be further progress on the infrastructure and the social spending package, and that may not occur until September, October. It's also going to be looking at the labor market numbers, and it's not just payroll numbers, it's whether you see the labor force participation rate go up. I think the Fed has signaled that it is prioritizing the job markets alongside inflation and maybe putting more emphasis on the labor markets. So you could be in this pattern until the next catalyst, and that might be really more post-Labor Day.
We're going to talk a little bit about D.C. later on, so I don't want to blow it now, but how difficult does it make your job to have that kind of uncertainty, Joyce? Because it's like we either get another $4 trillion in stimulus or we don't. We either get capital gains doubled or we don't.
I think that, the focus is very much on the infrastructure and the social spending package. I think you probably won't get a lot of details on the tax proposals or some of the proposals that will take more negotiation for some months right now. I think they're very much focused on keeping the bipartisan package together for infrastructure. And, I don't think it's a $4 trillion number, but the market has consistently underestimated, what could go through. So you have market consensus around 1 to 2 trillion. Could it be more than that? And that comes with the budget reconciliation process, which I think is a September to October event. So, I do see, though, that there is still more, fiscal that's coming online. There's still stronger growth that hasn't peaked in the U.S. We do think you're going to see an improvement in the unemployment numbers going closer to 5% by the end of the year. And I do think it's going to be, though, much more of a cycle that isn't fully synchronized. Delta variant is going to be more of a factor in certain places. We see the global inventory constraints as well, when we look at, not just semiconductors, but other markets. So you still have that it's going to be more staggered. And this is one reason why we don't think that, we've peaked yet here. And we have seen more attractive valuations emerge.
Talk to us, again, push us forward and round us out to where we are in terms of earnings season. You mentioned that we're not quite yet at peak growth. What does that mean for peak margins? And really, are you starting to see companies return to investing in CapEx, investing in R&D, instead of just returning the cash to shareholders?
Well, I think this is what we've seen. We've actually seen very strong business investment here. And in certain sectors, we do think that you're going to have, continued growth. Now, energy is one sector we focused on because, ironically, all of this focus on ESG and on clean energy and energy transition has led to this huge gap on the investment side. We think there's a $600 billion gap for large cap energy that needs to really be coming in line over the next decade to bring it back online. So you've got these supply constraints. And that's one thing that I think you will see is that there is a response by the business community to this, just because they have the capacity to continue with the CapEx and the business investment here. So it is the momentum on the macro side. It is Joyce? Also the...
Yes, no, finish your thought, Joyce.
Momentum on the macro side, but it's also that we see that the valuations really are more attractive here. Some of the pullback has been very significant in the recovery plays.
Joyce, thank you so much. Joyce Chang there from JP Morgan stays with us. We'll talk a lot more about her Washington policy perspectives, and then we also have a great question from a viewer, Joyce, who's asking about Jackson Hole. Coming up, senators are closing in on an infrastructure agreement. We'll get some more on that with Joyce Chang. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Taylor Riggs with Matt Miller. We're both here in New York, and we're saying hi to Francine Lacqua, of course, over there in London. Kayleigh Lyons is off today. And you guys, you know, at least here in the U.S., we've all been focused on when are we going to get infrastructure? A bipartisan group of U.S. senators closing in now on what we hear of about a $579 billion infrastructure deal. Let's do it all with Emily Wilkins, Bloomberg government congressional reporter here for us. And Emily, I hate to say it, but we've been talking about this deal for what seems like a decade. Are we any closer?
I was just talking with someone last night saying that it feels like Groundhog Day because, yes, I'm still coming to you and saying that a group of bipartisan senators are continuing to negotiate. We did hear yesterday they feel very confident about where they're at. There was a debate over how to pay for the bill. They didn't want to bolster IRS funding in hopes of getting more unpaid taxes, so they had to find another workaround. They decided on doing that by delaying a Trump-era rule on Medicare and drawing that back a little bit. That's going to give them a bit of a pay for. But at this point, they still need to figure out several things with transportation. And you know, Taylor, it's so interesting. So much when you're from Washington, you talk about Joe Manchin, Joe Manchin, Joe Manchin, Joe Manchin. But to be fair, every Democratic senator right now has that power that Joe Manchin has. They have the power to raise their hand and say, hey, I'm not going to vote for this bill unless you do X, Y, and Z. And we're seeing that right now from a number of Democrats, including Tom Carper of Delaware. He said he would object if there wasn't more money for water and sanitation. You're hearing other Democrats raising concerns about not enough funding for high-speed rail, about not enough funding for fossil fuel pollution in this bipartisan infrastructure bill. We're hearing Monday. The group's saying Monday, but we'll see.
I was going to ask, actually, is Monday the day? And if it's not Monday, is it at least going to be next week?
You know, earlier this week when they were setting up for the vote on Wednesday, you kept hearing Monday, 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 Monday. Now we're hearing Monday and a little bit of Tuesday. I mean, look, if you're Majority Leader Chuck Schumer, you need this thing to move, and you need it to move quickly, because otherwise this bill needs to pass, it needs to get into law, and it needs to go into effect, so you, as Majority Leader Chuck Schumer, have a better chance of holding the Senate when the 2022 midterms come.
I love that, Emily. It sounds like an EU summit you pack for like 2 days and then it just drags on. Emily Wilkins there from Bloomberg DC. Now, still with us to talk about the Washington perspective is Joyce Chang from JP Morgan. Joyce, I immensely enjoyed your note on the Washington policy perspectives, but what's interesting is actually, you know, we talked a little bit about what's coming up on Monday, but you really take it from, you know, what's the relationship between the U.S. and China and how does that filter through to markets?
Well, I think that the relationship between U.S. and China, I would characterize it as a full-fledged strategic competition. So there had been a lot of hopes that you might see, you know, a real change in the agenda, maybe a reset between the two countries. But I think you will continue to see that, particularly on emerging technology, there's a flurry of U.S. actions to watch. Some of them in the Congress, some of them from the White House as well, and how China responds needs to be watched as well. So this hope that you might have a reprieve. What I do see is that you know, it is still using the full toolkit of what could be available in taking action, whether it is you know, Congress moving or whether it is sanctions, but also export restrictions and export control. So the one thing that really stood out here, because we've seen a lot of inflows going into China, particularly into the fixed income markets, is that, you know, those tensions are probably going to continue to, you know, escalate more rather than come down.
Yeah, you know, we've seen the China issues hit individual stocks, certainly, but we haven't seen the big market reaction that we saw during the Trump trade war. Is that coming, Joyce?
No, it's really not about the trade issues. I mean, Trump in many ways was very transactional. This is not about agricultural purchases. It's about emerging technologies. So if you take a look at imported products from China, there's for the U.S. 370 of them, and most of these do not fall under the emerging technology areas. But you will see, on the emerging technologies that these tensions continue to rise, as well as on the human rights and on the democracy issue. So I think that will be more in focus from the marketplace. After you get the infrastructure package done, I think there's still a lot of China actions that you're going to hear more about on the congressional side.
Yeah. Joyce, to our good question of a viewer who writes in, thank you, Anthony, for writing in, as we get into August, how important is Jackson Hole as a headwind or tailwind?
Well, we're going to see inflation numbers that are elevated and continue to be elevated here. So we're looking at global core inflation, 3%, the highest levels that we've seen in 25 years. We're looking the U.S. for these numbers to stay at 4 to 4.5%. So a lot of the focus is going to be on the messaging on inflation and why we think it's why there's conviction about it being transitory. And then remember, it's the dual mandate. It will go back to the labor market. And one of the questions will be the labor force participation rate, not just the unemployment number, that how many of these jobs will be coming back, particularly for some of the jobs that were sort of on the lower end in the service sector. So I think there will be more of a discussion, on both the labor markets as well as transitory inflation and just where will we see this, going, and what do we mean by transitory? What's the time frame for defining transitory?
Joyce, thank you so much. Joyce Chang, there, Chair of Global Research at JP Morgan. Now, coming up, how the world's largest restaurant chain is working to get its employees back in the office. Part of our interview, the Chief Executive of McDonald's. Also, Matt Miller, especially funny today, Matt. I feel like waking up early really definitely gives you the edge. We'll have plenty more on the humor of Matt Miller as well. This is Bloomberg.
What?
Billionaires in space?
What defines going to space?
There is a level where you
It's
get...
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around, and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I certainly think one of the things that we saw was our ability to stay connected through technology. WebEx, Zoom, you know, Amazon Chime. I've learned all the different teleconferencing tools, and they've all worked reasonably well for us. So I think, you know, we learned things there that we have the ability to stay connected. I think the other thing, though, that it highlighted for us is we ultimately are an in-person business. We're in person in the restaurants, or we're in person in the office. And so you lose something from culture, you lose something from a connectedness by being so remote. And so, you know, while it worked well for the time, we're committed to getting back into our offices, getting back into the restaurants.
So will you be bringing back all your office employees back and say 5 days a week, just like before? Or are you going to say 3 days a week, or what are you going to do?
We always provided flexibility prior to the pandemic. So we had 1 day of what we called flex time prior to the pandemic, where people could work from home, or, you know, if they needed to come in the office, we left it up to the employee. We're going to probably extend that. We are going to extend that to 2 days of flex time. But ultimately, it's about, you've got to do what you need to do your job. And so the expectations aren't changing, but if you have the ability to maybe have a little more flexibility, but a minimum of 3 days you need to be in the office or in the restaurant.
Well, that was the chief executive of McDonald's. Miller, I have a very love-hate relationship with McDonald's because you're going to see when your daughter's older, 3 years old, you'll be like, hey, I'll cook you anything you want for your birthday. I can do lasagna, anything you want. And they'll say, actually, can we have McDonald's?
Not my daughter, because I'm from Columbus, Ohio, the hometown of Wendy's. And she is going to want that Dave Thomas quality. Also, yesterday I went to Chipotle here in New York.
There you go.
Chipotle at an all-time high. It's a $50 billion market cap, which I thought was amazing. And I have yet to try, by the way, Chick-fil-A, which has become an absolutely huge thing here in the U.S. But I don't know if it's in Europe at all.
I feel like I'm actually an Ohio girl at heart because I love the Buckeyes.
Yes.
McDonald's. Let's focus on McDonald's. The full interview on the David Rubenstein Show, peer-to-peer conversation, which airs August 4th. So now let's get also straight to Tom Keene, a huge fan of Buckeyes, co-anchor of Bloomberg Surveillance. Tom, I know you're looking at real yields again. I know. This is like high-level stuff. News you can use.
Look at the equity markets here with the surge that we've got. It's a reset on a Friday in July, and the bears, Francine, are silent. Let's go back to the foundational chart. This is Roger Ibbotson out of Purdue University in Chicago, redefining the equity market 30 years ago at Yale University. I happen to use the Dow here because it's an index point we understand from the Guadalcanal low of 1942. I'm sorry, Francine, it's an 80-year bull market, and the bears just keep pushing and pushing and pushing against it.
Yeah, it's an important chart, but are you watching the Olympics, Tom? So I was looking at the medals chart, and I think for the seventh consecutive Olympic Games, the U.S. is projected to win more medals than any other country.
I'm fascinated by what their response will be, not only the 12-hour time delay, or whatever it is, but just with the pandemic and all. I really don't know how this is going to play out. I just can't get through the ads. That's what I know.
All right, Tom Keene there.
Ed Hyman later.
The surveillance.
Oh, Ed Hyman,
Ed Hyman,
cool.
I'm looking forward to that. Matt Miller will be watching the Olympics all weekend. And Taylor Riggs, thank you so much for joining us this morning. Happy Friday, everyone.
top about the mission, as you see the evolution of fintech enabling what you call democratization, do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think, you know, there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where, you know, digital disruption can really help with some of those groups. You know, that's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. You know, there's always more progress we can make. And sure, you're right. You know, in places like private investing, and you know, there are still sort of pockets of the market where, you know, you have to be in the know.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
That's going to continue to grow, but you know, the largest gains may be behind us.
Almost everything has told us here that we're in a regime shift. We're going to now see growth decelerate and inflation decelerate.
We are going to see a deceleration in growth, that's for sure, but I think the U.S. consumer will stay quite resilient.
The recent move is overdone. You're going to have a push higher for the remainder of the year.
You're not going to see deceleration until sometime into next year. There is still plenty of room for the economy to run.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get the weekend started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Ferro. Lisa back with us on Monday. Together again this morning with Taylor Riggs. Tom Keene, you got something to say? I could just feel it at the end of your tongue.
Yeah,
what is it?
Well, rumors has it Lisa will be back here. You know, the rest of us have been slaving away. She's been off on a sabbatical of sorts, and we look forward to seeing her back. And Taylor, I know, is going to get to earnings here that she observed yesterday afternoon as well. John, we got to go to the equity markets. The bears are in retreat.
Up 20 on the S&P 500, advancing 0.5%. This market looks good. Joyce Chang of JP Morgan joining the team about an hour ago, reiterating this 4,600 view that's come out of JP Morgan in the last couple of weeks. And the bulls are still bullish, Tom. Surprise, surprise.
Well, the bulls are still bullish, but they've got earnings to back them up. There are any number of earnings. I'll let Taylor, she's better at that than I am, but just Danaher in the COVID business just blew it out. I mean, there's no other way to put it. Citigroup, I know, went up to a 345 price target. And you wonder, John, how many Danahers are there going to be?
I think Danaher record high, the NASDAQ 100 record high. Twitter Snap, let's go there right now. Taylor Riggs, after the close yesterday, they just blew it away. And Facebook and Google are joining the party this morning.
Yeah, unbelievable. It was Mandeep Singh of BI saying that if you're an advertiser, you want to be on these platforms, namely Snap. Jeffries, of course, saying that if it's a choice between Snap or Twitter, they want to be in Snap as well. It's pretty incredible, the type of growth that you've seen. Higher daily active users than Twitter, John. Almost double, I think, the market value now. I thought a 10% move was incredible. 16% move on Snap. Every premium content wants to be there. It's Rich Greenfield over of Lightshed. He raises the price target to an 84.
Wow. Facebook up 2.85%. This just raising the bar, Taylor, for big tech earnings next week.
And everyone had given them sort of a lot of frustration of NASDAQ 100s at a record high, as you mentioned, John. How much of this is just a defensive move? But these are the companies, as Joyce Chang alluded to, they're turning out free cash flow. They're showing up. They're outperforming.
The numbers look good on Wall Street and beyond. And I have to say, this has been the most peculiar week. This is the price action cross-asset right now. Equity futures pushing higher once again. We've seen a string of gains through the week so far. We're set to add to them. The S&P 500 up another 0.5%, advancing 20 points. But Tom, what gets my attention is where the 10-year yield is right now.
Yes.
We closed last Friday at 129.03. Here we are at 129.47.
Nothing's happened.
On a week where we saw 112.60 on 10s. On what, Tom?
The gyrations are there, John. I like what you just did on Twitter, the Reuters article, where there's some real dissent at the ECB. You carry that over to next week at the Fed. Is the Fed all on the same page? I'm not so sure.
Do you think someone walks out? Do you want to go to that article right now?
No,
from Reuters?
I don't think they're going to walk out.
Let me just share the quote, Tom, so people understand what we're talking about. A third policymaker who also voiced significant objections had to leave the meeting early and was not present at the final tally, according to some of the sources that Reuters were talking to after that meeting yesterday. I don't anticipate that's what happens with the Fed next week, Tom.
No, I don't think so. They may not even have a dissent, but I just think there's a into the weekend where we're all reading and trying to recalibrate for Q3 and even re-guesstimate for Q4, John. I think it's just a weekend to really think about what your conviction is in your belief. And the conviction I see on the screen is the bears are in retreat.
They are. Equities up by around about 20 points on the S&P, advancing 0.5%. Taylor Riggs, one more trading day to go to get to the weekend.
We are almost there, and let's talk about some of the economic data in the morning brief that we're going to be getting this morning as we count our way to 9:45. Let's start with some of the PMI data at that. Of course, we had the composite last time coming in at a 63.7. Look at services this time around, a 64.5, and manufacturing, which is what we're looking at here, at a 62. So you're going to be looking for a steadying out after what has been a pretty big climb higher coming off of the lows of about June 2020. We change forward to push again back to 1 p.m. with the Baker Hughes rig count. Huge stuff going on within the commodities market. If you take a look at coins, soybeans, Arabica coffee hitting record highs. But then, of course, the oil market has been shaking up the space as well with the Baker Hughes rig count data, trying to see some rigs come back online. What does that mean for prices? And yes, John, finally, the Tokyo Olympics. They've officially started, but you actually made a good point. Some of the soccer stuff, it's already started. You have like the official unveiling, but some of the stuff's already underway. I don't get it.
Why do we always do that? I don't get it either. I know whatever happens with our next guest, it doesn't matter how I start this conversation, Tom will restart the interview by talking about the Olympics. So let's head to Tokyo and start the conversation by talking about the Olympics, and then, Tom, we can move on from there, okay? John Vell, Nikko Asset Management Chief Global Strategist, joins us right now. John, can you talk to me about the degree of excitement in the city you're in right now?
Well, to be honest, the mood is pretty grumpy here because of the lockdown and all the trouble that's been affiliated with the Olympics, the to and froing from various edicts that have been put out. But essentially, a good number of people are quite happy it's happening. And of course, the athletes are very happy it's happening. And thank goodness that Japan was able to have the Olympics here. I don't think anyone else really could have done it, to be honest, at this stage. So it will be quite safe and secure. All the Olympics activities are happening in a bubble here, and a lot of people will be happy when it's over, to be honest here. And
I
then
think
the
you might be one of them,
economy can
John.
start
I've got to say, Tom, that John Vell doesn't sound thrilled about what's about to take place in his city in Japan.
Well, that is the mood here, to be honest. If you're watching on TV, it's fun, but there is a sense of skepticism about the whole thing here. It's been sort of a burden for Japan,
right,
and it's caused a lot of bad feelings.
To a nation, John Vell, where symbolism is everything, is the emperor engaged with the Olympics? Is the prime minister engaged with the Olympics?
Yes, they are. They will be at the opening ceremonies, although a lot of people have dropped out, to be honest, like former Prime Minister Abe dropped out. And I think there's only about close to 200 people from Japan who will be attending the opening ceremony. So it's very pared down. I think there's about 600 or 700 foreigners who will be at it. So very pared down.
That's amazing. John Farrell, I'm sorry, your entourage is 200 people. That's incredible.
We couldn't go to the Olympics this year, I'm afraid, Tom. Yeah. We couldn't make it. Do you want to talk about markets, John? Should we do that right now? Let's pivot hard away from something that's clearly upsetting you, sir. This is no good Segui, Tom. Equity futures up 20 on the S&P. We're advancing 0.5%. John, it just feels really difficult to push back against this market. Even with the bond market doing what it's done this week, equities were still doing okay. The drawdown was what, 2, 3, 4 percentage points on the S&P. What is the bear case now through this year?
Well, I guess you have to look at what Tom was saying earlier. There might be a surprise out of the Fed. It seems like there are some very hawkish members who might dissent at the next meeting. There's also the question about who's going to be chairman going forward, and that's much more important than when the Fed starts tapering. And of course, Powell has the job if he wants to, but if he wants it, I think. But I think there's a chance that he might say, well, I've done enough and retire before things get any hairier. So that could cause some uncertainty, but it certainly doesn't seem like it's going to be earnings, does it? I mean, because I'm glad I'm not an analyst in the States. I mean, it's just embarrassing how much these companies are overshooting analyst estimates, isn't it?
John, the backdrop, of course, of all of this is a 10-year at a 129, and it was Nikolai Mai of PIMCO last hour saying half of it is some of the positioning and the technicals, but some of it really is fundamentals, a slowing down, concerns about the Delta. What do you think?
Well, I think it is a combination of a lot of things. I think there's a lot of foreign buying, too, maybe especially from Japan. The data showed a lot of buying by Japanese banks, and I believe it was in June. And so there's certainly a lot of different factors going on, and people really believe the Fed when they say that the CPI is going to be coming down. There's a boatload of money out there that needs some place to be, and so they like to be in treasuries, or almost regardless of the price. It seems it's certainly better than European yields and Japanese yields.
John Vale, in the Western world, you're one of the great Japan watchers. When you hear the word Japanification, the Japanification of Europe, the Japanification of the United States, is that a genuine concept for you?
I go back and forth on that, to be honest, a little bit. Japanification, certainly in terms of the economy, is not happening to the U.S. economy. I mean, the Japanese economy has been quite dull for quite some time. The U.S. economy has bounced back strongly, and inflation is back strong. Japan's been suffering from deflation or no-flation, as I call it, for decades now, and that's not happening in the States. So there's some aspects that certainly can happen. Certainly the debt burden that's going up in the States is a form of Japanification, and perhaps some of the attitudes about how society works is moving a little bit more in Japan's way, a little bit more of the polite version of society as opposed to the aggressive side. So there are aspects. Certainly Japan has led the way in terms of monetary policy and started QE, started negative rates, all these things. So certainly Japan has some examples to show the rest of the world, for better or for worse sometimes.
And stuck down there for a long time. John, it's good to catch up. Good luck for the following month. John Vale there, Nikko Asset Management Chief Global Strategist. Equities doing okay, up 20 on the S&P, advancing 0.5%. Let's bring in some of the research. This from Bank of America this morning. Global PMIs likely peaked in May. Euro area PMI is close to the top. This coming from their team, Tom. They go on to say cyclical catalysts for the US recovery are looking, quote, increasingly tired. So let's be clear about this. Not everyone is bullish on this market right now, Tom.
No. I would say that's consensus is I'm in the market, but there's a lot of that going on. John, you bring up a really important point of research published over the weekend. How much of the sell side is going to front run next week's tech juggernaut and get out front of it with adjustments? That's something to watch for over the weekend.
Well, I think to Taylor's point, after those numbers, after the close yesterday from the likes of Snap, the likes of Twitter, the bar's just that little bit higher now, going into the likes of Facebook. Those numbers look good. Those stocks this morning look good. Your equity market advancing 0.46% on the S&P 500. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. Lisa will be back with us on Monday. From a beautiful New York City, this is Bloomberg.
With the First Word News, I'm Laura Wright. A bipartisan group of U.S. senators is closing in on a $579 billion infrastructure deal. They agreed to pay for it in part by delaying a costly Trump-era Medicare regulation. Details won't be announced until at least Monday, and any deal could face opposition from Democrats in both houses of Congress. The head of the CDC says the U.S. is at another pivotal moment in the pandemic. Rochelle Walensky says COVID cases are once again climbing and beds at some hospitals are filling up. The government says that by the second week of August, the number of new cases may be up 39% from last week. The job market has sprung back to life in London. 2 separate surveys show it's become a hotspot for the first time since the pandemic closed vast sections of the economy. The Recruitment and Employment Confederation said London had 6 of the top 10 areas in the UK for new job postings last week. And the job search website Indeed says consulting and financial firms were among the top companies seeking staff in the city. Tokyo's Summer Olympic Games formally gets underway today, a year later than expected, and with no spectators in the stands. The coronavirus has been the latest and biggest challenge for the event, but not the only one. The Tokyo Olympics has been marred by everything from a scrapped stadium design to a bribery probe. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we got liftoff.
Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. Global markets markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We have a pandemic among the non-vaccinated, those who are not vaccinated. If you are vaccinated, you are safe. If you are vaccinated, you have over a 98% chance of never catching the virus at all. But the vaccines are good against all of the variants that are out there, including the Delta variant.
The CDC has called it another pivotal moment. That was the President of the United States. This is Bloomberg Surveillance, live from New York City for our audience worldwide. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. Lisa back with us on Monday. Here's the price action right now, and the S&P advancing another 21 points. There's a lift. We add some more weight to the benchmark in America, up another 0.5%. Yields all over the place this week. The only thing I can tell you is they're a little bit higher now than where we closed last Friday. 129.30. Yields advancing a basis point or two. Euro dollar slightly negative yesterday. We add to it 117.64 on euro dollar. The dollar index just having a little look at 93 again. Outside of that, in the commodity markets, 71.95, 71.94, 93, just south of 72. We are unchanged on WTI, Tom.
Yeah.
But let's finish on this right here. TKDD once again getting absolutely hammered in the pre-market to 932, down by 8.63%. The mood is souring on these names. If you're a Chinese company listed in America, and if your name is DD Global, you're not having a good time.
Can you imagine the roadshow for the NASDAQ Golden Dragon China Index? They probably did Chinese takeout. I mean, you know, that's what you'd think. Down 35%. John, the chart looks like Bitcoin from 60,000.
It does not look good.
There's some real damage here. When does the litigation start?
I don't know, Tom. I think it's going to build up pretty quickly.
Yeah.
We still don't know a fair deal about what's going on here. Before we go, Tom, I want the Taylor Riggs take on this. Taylor, we've been talking about this now for about a month, and every single day it just seems to get worse and worse for this company.
Seems like a stock that IPO'd at 14 on 629. Since then, I think you've been trying to figure out the risks of China. I said this 2 days ago, and I'll repeat it. How much of our analysts that we're speaking with now are looking at EM ex China? Given some of the regulatory crackdown that's coming, how do you take this into account? And then the further headlines today, trying to put tutoring firms into nonprofits. I don't know how you invest with that risk of the unknown.
Really, really tough right now. DD Global, Tom, down another 8+ percentage points.
That was very good. I mean, Taylor was right there on the edge of Lisa. I mean, it was the pendulum of unknown. There's just no other way to put it.
You miss Lisa, don't you?
Yeah.
Is that your response? Shall I cut that and send it to her?
She's been gone so much, John. I don't know what it's like to, you know.
You've forgotten what it's like to work with her.
Yeah, you know.
I think you got a flavour of it just then, Tom.
Yeah, I think we did. I think
just a little bit.
Taylor channeled it nicely. Let's channel down to Washington. Emily Wilkins joins us here. Bloomberg Government, hot, steamy Washington, a July summer Friday. Emily, how do the politicians get to Monday? For that matter, how do they get to the Sunday talk shows? Does infrastructure lead the debate?
Absolutely, absolutely. I mean, look, you've seen them at least come up with get over one negotiation hurdle. They were trying to figure out what spending was going to be. They didn't want to bolster the IRS to try and get more unpaid taxes. They came up with delaying a Trump-era rule on Medicare. That was going to be real costly. So that's one agreement they've got settled. But look, at this point, there's still a lot left to negotiate. There's the balance between highway funding versus public transit. You're hearing Democratic senators come out with concerns now. Tom Carper of Delaware saying that he's concerned about funding for water. Other senators saying they have concerns about public transportation, about fossil fuel pollution. I mean, this is the moment where every one of those 50 Democratic senators realizes that they actually have the exact same amount of power that Joe Manchin does. And if they want to stand and oppose, that's going to cause a huge headache.
Primaries, Texas, March 1, runoff, May 24. How close is March 1, 2022 to the assembled politicians in Washington?
They still have some breathing room. I mean, usually how things work in D.C. is that in years like this, 2021, they can get legislation done. They're going to go probably right up to the end of the year trying to work on stuff and get things done. Okay. But when you hit 2022, you maybe have a couple months in the spring. But after that, campaign season really kicks in, and lawmakers get very hesitant to pass any sort of legislation or do anything that could result in a negative campaign ad. So the push really is coming now, and we're going to see what's happening here senators are supposed to depart for this August recess on August 9th. There's a chance they could stay longer. There's a chance the House could be called in. But at this point, we still, again, do not have text and do not have legislation on the bipartisan infrastructure bill, nor on the $3.5 trillion Democrat-backed reconciliation package.
So, Emily, walk me through the process now. What's lined up for next week? What does next week actually look like?
So if the bipartisan group of 22 senators is to be believed, they're going to have something on Monday. Monday is the deadline that we have set, and we have heard from them again and again. That's something I'm definitely going to be listening to for the Sunday shows to see if that target date is changing at all. Another thing that they've got coming up is the debt limit. I mean, the debt ceiling, debt limit suspension expires on July 31st. We heard from the CBO that they think they can use metrics for the U.S. to continue to pay its debts until October or November. But this is something that Democrats are going to need to move on. And you've already seen Republican Senate leader Mitch McConnell come out and say, hey, we're not going to be cooperating with Democrats on this. It's very unlikely that Republicans are going to be voting on this. So that's just another thing on Democrats' plate that you really need to watch for in the next several weeks and months.
Emily, with that debt ceiling, how close does it come down to the wire then in October, November, if we don't have an agreement?
It has the potential to come down very close to the wire because we've seen this happen in the past. We've seen political football be played with this. We're seeing it again this particular time. I mean, Democrats they've expressed frustrations. They said, we went with Republicans during the Trump administration to raise it, and now they feel like Republicans should go with them. But, Mitch McConnell is trying to drive a hard bargain here, trying to see if he can get some things done, if he can use this as a negotiating tool. But yeah, there is a chance that we go past this July 31st deadline and we get into that period where the government is using these extraordinary measures to let the U.S. continue to pay its debts. And I can see us getting very close to that deadline. That said, lawmakers are very cognizant that what would happen if we miss the deadline would be pretty detrimental to the country. And so usually lawmakers do have a history of raising the ceiling before the U.S. is no longer to cover its debts.
Emily, thank you. It's good to catch up down in Washington. Bloomberg's Emily Wilkins, thank you very much. Start of the year, Tom. Washington, D.C. was the source of a tailwind for this market. Now increasingly, 6-7 months later, relatively speaking at least, feels like the source of some headwinds at the moment.
Yeah, I agree. But I can't get a handle on it. I mean, we all agree the nation desperately needs infrastructure. I guess we're arguing about how to pay for it. But as I mentioned in the primaries, John, I think what is underweighed here, and particularly by the business community, is the political realities of these primaries. All of these Congress people are fighting for their future.
And Tom, on the calendar, I think the calendar is an important point. For these congressmen, for the senators right now, they don't just want to pass a bill. They want to pass a bill where the money is deployed before the voting actually begins. This market will respond instantly. That money needs to hit the ground well before the voting actually begins. You need to see it in the data. That's what they want to see, Tom.
They will. John, did you see, if you got through season 1 of Ted Lasso?
I haven't, no.
I haven't seen it.
Tom, I've got stuff to do. Wait for the market to close.
Tonight.
And I'll catch up.
Yeah,
Is season 2 out right now?
I believe it came out at 3 a.m. this morning.
I'll start watching it during the show.
No, you got to watch the first season.
This is Bloomberg.